Welcome back to the European market open. A minute to go until the start of cash equity trading for this Thursday morning. Here are your headlines. The Senate's biggest critic of Wall Street labels Jamie Dimon star of the overdraft show as bank CEOs are grilled on the Hill. Big changes for big oil. Shareholder rebellions at ExxonMobil and Chevron could see the energy giants push towards a greener future. And activist investor Carl Icahn says he may get into cryptocurrencies in a big way. More from that conversation ahead. Let's take a look at futures then. 20 seconds until the start of the European equity trading session. And things had been deteriorating as we got a little closer to the start of the European equity trading day, and maybe some of the signal coming through from US equity markets where we are seeing, we were kind of flat yesterday at both sides of the Atlantic, but we are seeing US futures deteriorate. NASDAQ futures now down 3 or 4/10%. E-mini futures down 0.3%. And we had thought that we'd see a little bit of weakness perhaps in the German market. We are seeing the European equity markets getting into their, getting up and running now, just a few seconds into the trading day. And the London market, the first to open, and it is fairly flat, so we're not moving all that far on markets here in Europe so far. We'll get to a conversation around FX and the role that FX is playing in all of this. Through the Asian session, we also saw a little bit of a boost to sentiment from what was going on between China and the US on trade policy. Inflation, though, still very much a preoccupation in these markets, and we'll get to those bigger themes in just a moment. So the London market down by 0.2%. The CAC 40 also down by a similar margin, as is the IBEX over in Spain. So we are making some modest losses across European equity markets right now. That was after a fairly mixed session in Asia. I mentioned the trade narrative, the trade story that was helping to boost some of the Chinese stocks. Stocks tied to a broader economic reopening led gains in the US session yesterday. In particular, small caps were very strong. That's amid easing concern the Federal Reserve would boost rates sooner than expected. The dollar is holding on to gains. Joining us now is Ulrich Luckmann, Commerzbank's head of FX research. Ulrich, really nice to speak to you this Thursday morning. Help us understand the FX inputs into risk assets at this time. I was just having a conversation with my colleague Mark Cudmore in Singapore, who was saying for as long as the dollar doesn't break down further, that's got investors wondering what's going on, making investors nervous, and that's maybe spooking risk assets a little bit. Tell me about the link between the dollar and risk assets right now.
Well, I think the main link here is about the inflation expectations. Look, what we have seen at the moment is that markets are expecting very high inflation for the near future due to various special effects. And this is something which is bad for the US dollar, because it is certainly something which the Fed will not compensate for by higher interest rates. They have made perfectly clear that they will look through this period. And therefore, this is only deteriorating purchasing power of the US dollar domestically, which is not a good signal for the dollar on the FX market. On the other hand, inflation expectations for the longer run create the hope that the Fed might hike interest rates in the foreseeable future, perhaps even by end of next year or early in 2023. And this is something which is good for the US dollar, because then the inflation effect will be overcompensated for by dollar long positions by the interest rate. And therefore, it's very difficult for the market at the moment to assess which is the worst risk and will the Fed hike in the foreseeable future or not, how much inflation will they tolerate. And I think this creates this uncertainty that the market is playing at the moment. It's not about short-term risks, I think. It's about this long-term outlook. We don't know how the world will look like in 1 or 2 years. And this is the uncertainty that's driving dollar.
How much tolerance for inflation do you think the Fed has then, Ulrich, given its changing policy on that front and all the uncertainties around it? How much do you think they'll tolerate, over what time frame and to what levels, inflation, if they are seeing still some slack in the labour market?
Yeah, I mean, I think the Fed will tolerate in the short run a lot of inflation because they interpret this as special effects, bottlenecks in the economy due to lockdown, very unusual circumstances in the labor market with high unemployment, at the same time high vacancy rates. This is something which is kind of a special effect after this lockdown. It's completely different than after a normal recession because we have much quicker recovery of many sectors here. And therefore, the Fed does not know what to make of it, and therefore I think they will look through it. The point is how much of this effect will translate into higher inflation rates after these special circumstances. How much higher will inflation be in 2022, 2023 than it was in 2019? This is a difficult question. I think certainly there's a lot of arguments for permanently higher inflation, and therefore the Fed is more concerned about that one. But this boost in inflation that we are seeing at the moment, I think the Fed has very good reason to look through it.
Let me ask you about what you see in the Chinese currency and the role that that's playing at the moment, Ulrich. I see a headline across the Bloomberg says that China is said to ease offshore funding limits for foreign banks. But on the subject of currency markets, my colleague Mark was talking in the last hour about how we'd seen Chinese currency strength and that is having such a big impact on many things. It's an impact on the dollar, also an impact on commodity markets and the Chinese authorities trying to dampen down prices in commodity markets recently. What role do you see the yuan playing and the strengthening of the yuan playing?
Well, I think China is a very special case in these times. During these lockdown phases that we saw worldwide, consumption patterns were changing very significantly. And this was something which was boosting Chinese exports. And therefore, China is in a way of very special situation. Their export gains from these very special circumstances. Big question is how much will consumption patterns worldwide come back to pre-corona levels. And I think at least a good part of that is likely. And therefore, this special phase of a special Chinese business cycle might come to an end in the foreseeable future. And this is something which then would not justify these strong renminbi exchange rates, because then it would be more a burden for the Chinese economy and would strengthen the reduction of trend growth that we have seen in China long before Corona. And therefore, this is something where I think these strong renminbi levels are something of a concern for Chinese authorities.
Ulrich, thanks very much. Stay with us. Ulrich Luchmann, Commerzbank Head of FX Research. We'll be back with Ulrich shortly. But coming up next on the programme, a spoonful of sugar, or a sugar replacement. We'll speak to the CEO of the ingredients company Tate & Lyle. That conversation next, and talk demand during the pandemic and the company's outlook. This is Bloomberg. Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading session. Fairly flat for European equity markets. The Xetra DAX underperforms, down by 0.3%. Let's get to a UK listed corporate and their story. Tate & Lyle's full-year earnings per share beat estimates as the food and beverage ingredients company saw strong demand for its products during the pandemic. But it expects weaker earnings in 2022 on lower commodities profits and higher taxes. Joining us now is Nick Hampton, Tate & Lyle's CEO. Nick, good to speak to you. So the EPS number beat, the sales number beat, but I wonder if it's the guidance that the market is just digesting this morning. The stock down by 3.4%. Give us your top line in terms of that guidance. What is the message you're trying to get across to investors today?
Look, I mean, firstly, we're delighted by the performance of the business through the pandemic. Incredibly resilient. We saw strong top-line growth on our food and beverage solutions business, and our primary products business, despite the challenges of lockdown in the US, performed in a very resilient way, and that's reflected in a strong set of results with, as you say, EPS up 12%, really good strategic progress with 2 acquisitions, and MPD sales up over 20%. So we're delighted with the performance and the efforts of all of our colleagues around the world. As we look into this year, we're expecting to see an improvement in top line on primary products as out-of-home consumption improves in the US. Continued progress in our food and beverage solutions business, but earnings will be a little bit more muted simply because we're expecting a normal year of commodities and the tax rate to uptick a little bit. So continued strategic progress, just a couple of things impacting earnings in the short term.
How geared, Nick, is the business to that move from in-home to out-of-home consumption?
Well, for our primary products business in the US, it's an important consideration because a lot of the products we make in our primary products business go into out-of-home consumption. For the food and beverage solutions business, it's more balanced. You know, through the pandemic, we saw strong demand driven by higher in-home consumption. I think we'll also see demand continue to improve as out-of-home improves as well. So we're actually pretty balanced, I think, when you look at the overall portfolio across the world.
You've mentioned taxation. I assume you might be meaning the US, but maybe you're thinking of other jurisdictions as well. Are you making any plans, doing anything differently to try and compensate for the hit that's going to bring to the business, or is it just something that you just accept?
It's more of an impact of the fact that we saw some one-off benefits in the financial year we've just finished. So our normalised tax rate won't be significantly different to the past as we go into the year that we're starting. It's just we had an exceptionally lower rate last year because of some one-off benefits we saw.
I understand that the primary products business, you're looking for an investor to come in to that business, Nick, to possibly take a controlling stake. Can you update us on the conversations happening there?
Well, all I can say at the moment is that we're having conversations with a number of interested parties. We'll update the market as appropriate. But what I would say is, you know, this is an opportunity to really strengthen the ability to deliver the strategy of both sides of the business. We're very excited about the potential of Tate & Lyle becoming even more focused on specialty ingredients in areas where markets are really growing. So that business is increasingly focused on helping our customers produce healthier foods, and clearly the trends we're seeing in the world today play in that arena. Equally for our corn-based business in North America, bringing in an investor to expand that business beyond its current footprint to things like bio-based materials is an exciting opportunity to accelerate the growth there as well.
And I mean, you say you're talking to a number of people, and I appreciate there's a limit to what you can say, but is it all still about a controlling stake, or are some parties saying they want to take the whole business? Is it very specifically around a controlling stake in primary products?
No, as we said, it's about a controlling stake. We want to maintain an interest in that business going forward because we believe in its future, and it will be an important supplier to Tate & Lyle as well as we move forward.
And would there be a plan to return cash to shareholders if you do manage to secure a deal through these negotiations?
I think it's too early to talk about what we might do with any proceeds. The board will make a decision at an appropriate time should a deal complete, and we'll do that on the basis of the interests of all of our stakeholders.
Can I ask you about corn prices and the recent rise that we've seen in corn prices? How is that being dealt with by the company?
Well, when we contract business with our customers, we lock the corn price, so we lock it into our cost base. So in the short term, it's not a major concern for us. We'll see how the crop season evolves and how prices evolve through the balance of the year.
Nick, good to speak to you. Thanks very much for joining us. Nick Hampton, the Tate & Lyle CEO. Thanks for spending time with us here on the European Market Open. We're 14 minutes into that European Market Open, and let's get a look at some of the stocks on the move this morning. For that, here's Danny Berger.
And I'm looking at some of the more positive stories today, and by far the most positive is Airbus leading the gains on the Stock 600, really ramping up production, telling their suppliers, get ready for this. They're going to aim to get production above 2019 levels, so definitely a lofty goal from them. So with that in mind, we're also seeing their suppliers move higher, and Meggitt is one of them. Those shares up just under about 3%. You can see over here 2.6%. Again, off the back of that positive Airbus story, just for some context, one of the jets they're talking about, they currently make about 40 a month. Their goal for 2023 is over 60, so a definite increase. Finally, CD Projekt, that's the games maker, also moving higher in today's trading. This just has to do with some executive action over stocks. Their CEO did hold just under 10% of the company, and he has upped his stake to 10.4. Though when it comes to the overall markets picture, you really get a sense that we're starting to enter the summer doldrums here. Volume has been pretty low, especially when you look at the U.S., and short positions are still pretty built up in U.S. 10 years, and especially when it comes to JP Morgan's clients. That might be why we're seeing some of those yields move in the way they are, just because we're getting a little bit of short covering. Of course, they don't trade in a vacuum. We're looking at German 10-year yields also around negative 20 basis points. And with that in mind, the rate story isn't necessarily connecting with the equity story. We are seeing NASDAQ futures move lower this morning. Binky Chadha over at Deutsche Bank saying that, look, this is all about relative earnings. The big growth story hasn't necessarily been there. It's all about cyclicals from here on out. And we are seeing small cap futures not doing as bad as those big growthy names, Anna.
Danny, thanks very much. Danny Berger with your market briefing there. Let's get a briefing now on the corporate news flow. And for that, here's Laura.
Thanks, Anna. The CEO of Exxon was dealt a defeat by shareholders when a tiny activist investor won 2 board seats and promised to push the oil giant to do more to fight climate change. BlackRock, Exxon's largest shareholder, voted for the new directors, saying the oil giant could benefit from a fresh perspective. The result sends a signal that institutional investors are increasingly ready to force companies to tackle climate change. Nvidia, the largest US chip maker, gave a strong forecast on demand for its products used in gaming, PCs, data centers, and crypto mining. It sees revenue at $6.3 billion, higher than analyst estimates. Executives expect demand to strengthen in the second half of the year. HSBC is exiting its US domestic retail banking business, agreeing to sell 90 branches. That's as Europe's biggest lender looks to boost profitability as it focuses on its wealth management business. The bank expects a pre-tax cost of $100 million from the transactions. That's the Bloomberg Business Flash. Anna.
Thanks, Laura. Laura writes in London. Now, coming up on the programme, the yuan jumps to a 5-year high against a basket of peers as the US and China hold candid trade talks. But can it sustain its strength? We'll discuss that and other news in currency markets. We'll get back to Ulrich Luckman from Commerzbank. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 21 minutes into our European trading day, and we can see the German DAX is under pressure, down by around 0.5%. Elsewhere, a little flatter on European equity markets. The CAC 40 up around 0.1%, focused on luxury assets there with the caring news. The FTSE 100 fairly flat. Now, it's turning into a blockbuster year for the Chinese yuan as the currency rose to its highest level since March 2016. Authorities are growing comfortable with its strength, suggesting more appreciation is likely, but our guest thinks the rally might be overdone. One of his key convictions is to go long on euro yuan. Ulrich Luchmann, Commerzbank head of FX research, is still with us. I wanted to ask you about this view around euro renminbi then, Ulrich, because we talked a little about your view on the Chinese currency more broadly, but why the enthusiasm for the euro against the Chinese currency?
Well, it's basically the idea that renminbi is too strong given that we get a normalization of Chinese export patterns. On the other hand, I'm a little bit skeptical about going long US dollar because I see problems with the US dollar coming along for other reasons, like the extremely expansionary fiscal policy. And therefore, I think it's more a trade of renminbi against a broader basket. And here, euro has quite a large weight in this basket. And therefore, I think euro renminbi is something like a substitute for renminbi against the rest of the world, with the exception of the US dollar, you know?
Okay, so it's about that basket more broadly, but more specifically then on the euro, Ulrich, what is in the driving seat for the euro? I guess I'm thinking here about euro dollar. Is this the dollar weakness story, or is it something about the recovery play, the later vaccine rollout in Europe? Is that still relevant, or what's in the driving seat?
Well, I think the market is already looking through this story of vaccination and recovery in Europe, and this is partly priced in. But the point is that the euro is quite weak on a fundamental basis for a long, long time, basically since 2014, because we saw a situation where the ECB was conducting a very expansionary monetary policy, and everybody was expecting them to continue for the foreseeable future. While for the Fed, there has been much hope that they might run a more active monetary policy with a chance of higher interest rates. And this was true in 2016, 2018, and now the hope is again that they will return to such pattern. But I think the market is overdoing this a little bit. I think this reinflation that we are seeing at the moment is something which will not translate into so much higher potential for the Fed to run a more restrictive interest rate policy in the foreseeable future. And therefore the dollar is not so much different to the euro from the perspective of monetary policy that this justifies such a weak euro and such a strong dollar.
That's interesting. And what do you expect from the ECB in the short term, Ulrich? How do you expect the ECB to manage the latest communications around its PEP program?
Yeah, sure. I mean, this PEP program is certainly something which they are discussing at the moment, and we might see changes there, and we might see them becoming more cautious on that one. In a way that is not shocking the market, certainly, but this is something which might come in the future. For the FX market, however, the point is this is containing very little information about their future interest rate policies. When central banks were winding down QE programs in the past, it was often interpreted as a sign that they might also hike interest rates in the foreseeable future. And therefore, it was a good sign for the currencies under consideration. But this is not true for the euro and the ECB at the moment. The fact that they might wind down their PEP program is telling us little about a chance of higher interest rate in Europe, even in the very long run. Because markets are expecting that in Europe, inflation will stay low, around 1.5% for the very long run even. And this does not open the space for higher interest rates in Europe. If you regard the ECB as more dovish or more hawkish, does not play a role there.
Ulrich, we've seen the pound strengthening a little, perhaps. Do you think that that is justified, given your suspicion that we won't necessarily see such inflation as is feared by markets in the US? Do you think the same applies to the UK? And where does that leave the pound?
Yeah, for the UK, basically a very similar story as for the US is applying. We saw a quick recovery. We are seeing the expectations that we might also see some permanent reinflation there. Look, my view about inflation is that we saw very low inflation for the last decade, basically for very structural reasons, which have not changed through Corona. Therefore, I'm very skeptical about the reinflation story in the US as well in the UK. And therefore, I think also a pound strength is something which is perhaps not persistent.
Okay, Ulrich, thanks so much for joining us. Really nice to speak to you. Ulrich Luckman, Commerzbank's head of FX research. Ulrich will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time, so I look forward to speaking to him then. Coming up on this program, though, Chevron, Shell, ExxonMobil all handed a series of stunning climate change rebukes as courts and institutional investors back green activist demands. We will talk about that sector next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open, half an hour into Thursday's session, and things improving a little at the margin, perhaps. Not for the Xetra DAX, that firmly in the red, down by 0.4%. The FTSE 100, though, up by 0.1, and the CAC 40 up by around 0.2%. Let's have a look at the GRR, and we can see a little bit about of the explanation as to why we see that divergence around Europe. Certainly to the upside, the biggest gaining sector is travel and leisure, and Airbus, which is a huge weight, of course, in Paris. That stock is up by 6.8% right now. That on that renewed guidance from the business and guidance to suppliers about the rate of production for the aircraft manufacturer. So a big gain in the Airbus share price. On the other side of things, you just saw flash up on your screen, the Bayer share price. That is a big weight in Germany. Bayer is down by just under 5%. It is almost the biggest loser. It's certainly by points one of the biggest contributors to negativity on the stock 600. Bayer down by 5% right now. That as the company came forward with a resolution for future claims related to the Roundup weed killer, but that was rejected by a US judge. And so again, once more, legal uncertainty surrounding that particular business. Let's get a Bloomberg First Word News update. For that, here's Laura.
Thanks, Anna. The CEOs of Wall Street's biggest banks faced a grilling from the Senate Banking Committee yesterday. One of the tensest exchanges was between Senator Elizabeth Warren and JP Morgan boss Jamie Dimon. She blasted him for not automatically eliminating overdraft fees during the pandemic. He said they were available on request. In the UK, Prime Minister Boris Johnson is battling a major attack on his authority. That's after former advisor Dominic Cummings, the strategist who masterminded his rise to power, declared him unfit for the job. Cummings says Johnson's poor leadership led to thousands of unnecessary deaths. The testimony had the potential to damage Johnson's standing among Tory MPs who he relies on to stay in power. Switzerland has refused to sign a treaty it hammered out with the European Union. The move is likely to undermine relations with its biggest trading partner and potentially damage the economy. The Swiss government says the two sides weren't able to agree on state aid and wage protections, two of its key concerns. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura writes with your First Word News updates. Now, let's turn our attention to the energy sector. Chevron shareholders backed a proposal to reduce emissions from the company's customers, rebuffing the firm's board, which had urged them to reject it. It's the latest sign that oil titans are coming under increasing pressure to address environmental concerns. We spoke exclusively to the Chevron CEO, Mike Wirth, about the growth of ESG investing.
There were times, not too many years ago, where it came up infrequently in discussions with investors. Today, it comes up in every discussion, and oftentimes it's the first thing that comes up in a conversation. So I'm not surprised that it's high on their minds. I meet with investors all year long, and this has been a regular topic that we've been hearing about. And you're right, investors do want to see higher returns. Our industry is one that has not been in favor with investors because our returns haven't been as strong as they historically were. And so we've got work to do. It's why I really talk to our people about just 4 words: higher returns, lower carbon. We need to do both of those. When I talk to investors about that, they say that's exactly right. You're hearing what we're saying. That's what we expect, and that's what we're committed to.
Of course, today was rather extraordinary because ExxonMobil was taken on by a tiny activist investor and has lost 2 board seats, if not 3, to them. It would seem that Shell is also being ordered to slash their own emissions via a court as well over in the Netherlands. Do you worry that this will go to the courts as well, not just your annual general meetings?
Well, I've been in a board meeting after our annual meeting, so I haven't seen all the developments that have occurred today. But you know, this is a very active environment that we find ourselves in. There are lawsuits that have been filed on various aspects of climate around the world. And we don't believe that's a fruitful way to engage in dialogue on this issue. We think that they generally distract companies from the real important work, which is working on technologies, working on progress and taking actions. And ultimately, the lawsuits haven't really proven to have much merit, and I don't know how the suit in the Netherlands today will play out. But we look for constructive engagement. We look for to be challenged, and we're taking action, and we intend to take more action.
To be challenged by activist investors in particular, how much do you think are they a threat to the business model in general, to a joined up business model that you provide in terms of oil and gas? Well, I think activist investors, other investors, they want to be heard. They have a point of view. And look, we engage, as I said earlier, with our investors all year long. And so we're listening, we're engaging, we're as transparent as we can be. We just issued a very lengthy report on climate change and our company's resilience in a variety of scenarios. We did an analysis under very aggressive carbon reduction scenarios to look at how our company would fare under those. And so investors of all types are focused on this as we are. And so that's part of it's part of the environment today for companies that are providers of energy. And I believe our industry is part of the solution. We have the technical capability, the project management capability, the engineering acumen, and the financial capacity to be part of the solution.
That was the Chevron CEO, Mike Wirth, speaking with Bloomberg's Caroline Hyde. Now, Chevron wasn't the only oil major to find itself facing a green revolt at the hands of investors. Exxon management was also dealt a stunning defeat by shareholders when a tiny activist, you heard Caroline reference it in that interview, a tiny activist investment firm snagged at least 2 board seats, maybe 3. It promised to push the crude driller to diversify beyond oil and fight climate change. Meanwhile, over in Europe, Shell was ordered to slash emissions harder and faster than planned by a Dutch court. For more, we're joined now by Bloomberg's Jess Shankelman. Jess, very good morning. Good to speak to you. I'm sure you've been tracking all of these stories then, from Chevron to Exxon to Shell. What do you think is going to have most resonance for the oil and gas industry? I was looking at all of these cases and trying to work out which has the biggest potential to impact the future for the sector.
Hi, Anna. Yeah, it was quite a seismic day. We were talking yesterday morning about Exxon and Shell. I have to say, I wasn't sure that the activists in the Shell case had such a strong case, but it really shows the zeitgeist at the moment and the way that the Paris Agreement 6 years ago is starting to infiltrate through to courts and through to investors. One of the things that, just listening to the interview there, that really struck me was we've seen this over the last couple of years. We've seen a growing number of investors coming under pressure to divest from stocks, that oil and gas stocks, that carbon-intensive stocks. And some investors, like BlackRock, have said, we're not going to divest. What we're going to do is use our power from being investors to holding the shares to make change within those companies. I think within the environmental movement, there was always a bit of skepticism of, oh, sure, you haven't got the balls to do that. But I think what we're seeing now is the emergence of people actually enacting that and saying, right, this is what we're going to do with our power as shareholders. And there's a sense that climate change is absolutely happening and action is happening to tackle it. Countries have been setting net zero goals. We had China in September last year, Japan. About 70% of the world's economy is now covered by net zero goals. So if this is happening, these companies, the Chevron, Exxon, Shell, are not prepared, and there is a severe transition risk, which means investors stand to lose a lot of money, and that's what they're concerned about.
We know that there's a mismatch, Jess. There's often been a mismatch, or there always has in the past, between what environmental campaigners would like to see from oil companies and what oil companies plan to do themselves. How big is the mismatch between what shareholders want oil companies to do and what oil companies are prepared to do? Because you take a business like Shell, they've talked for quite a long time about being committed to the energy transition, and they have plans and they have targets and they have a plan for net zero, and yet the court still says it doesn't go fast enough. I wonder, is that going to be the impact of all of this, that oil majors just have to do things more quickly?
Well, yeah, I think this is is the thing where we're seeing a convergence of this idea of being an environmentalist and being an investor. More and more, we had last month, we had quite a lot of banks sign up to this new net zero alliance. So it's not just campaigners standing outside waving placards anymore. It's businesses saying, what are you doing with our money? You're not seeing which way the wind is blowing. We're really worried about your long-term plan. And also, in the case of Exxon, their short-term plan, they're losing a lot of money. Their strategy is not going well. So there's no kind of confidence or comfort that they can take from that.
Jess, thanks very much. Thanks for bringing us an update. Jess Shankelman joining us there. A busy day on the oil beat, that's for sure, when it comes to the court and activist investments. Coming up here on this programme, it was also a busy day for anybody watching Capitol Hill and the banking sector. The star of the overdraft show, Jamie Dimon and Elizabeth Warren, share a tense exchange during a Senate grilling of Wall Street CEOs. We have details next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
As the U.S. economy rebounds from the ravages of the pandemic, the country's biggest companies are finding themselves in need of workers. That, in turn, is putting upward pressure on pay. Wall Street giants, fast food chains, ride-hailing companies, in some form, all are offering higher wages, hybrid work opportunities, or even extra cash payments. Referral and signing bonuses, rarely needed before to fill entry-level, low-wage jobs, are becoming commonplace.
Essential workers need more than a thank you. That's why they've been demanding to be respected, protected, and paid, particularly during this pandemic where they've been showing up, feeding us, caring for us, serving us, and delivering packages for us.
These incentives represent a slow but steady march toward a goal that lawmakers and labor activists have pursued for years, a higher minimum wage.
We need to reward work, not just wealth in this country. People in both parties now recognize it's time to raise the minimum wage so hardworking people earn at least $15 an hour minimum.
The likes of McDonald's, Chipotle, Target, Costco, and Bank of America all announcing such wage increases.
Those companies that do right by their team members, that do right by their workforce, are the ones that actually end up doing better financially.
The hikes come amid an intensifying debate about inflation. As employers' costs rise, consumer prices perhaps will follow suit, stoking a further acceleration of that debate.
We're watching the inflation concerns, as is everyone else, but we're not seeing that yet. We're seeing, we pay a good market rate already, and so we're monitoring that.
However, despite the inflation concerns and the fact that millions of Americans remain out of work, companies are feeling pressure to meet what's become that new benchmark for worker pay.
A look there at how the recovery in the US from the pandemic is transforming worker pay in America. Let's think about the economic recovery and how the banking sector is experiencing that. Elizabeth Warren lived up to her reputation as the Senate's biggest critic of Wall Street in Wednesday's grilling of bank CEOs on Capitol Hill. She labeled JP Morgan's CEO, Jamie Dimon, as, quote, the star of the overdraft show.
Without that overdraft money, would your bank have been in financial trouble?
We waived the fees for customers upon request if they were under stress because of COVID.
You know, I appreciate that you want to duck this question. Do you know how much your profits would have been if you'd actually waived overdrafts as the regulators recommended?
We waived the fees every time.
The answer is your profits would have been $27.6 billion. I did the math for you. So here's the thing. You and your colleagues come in today to talk about how you stepped up and took care of customers during the pandemic, and it's a bunch of baloney. In fact, it's about $4 billion worth of baloney, but you can fix that right now. Mr. Dimon, will you commit right now to refund the $1.5 billion you took from consumers during the pandemic?
No.
Right now?
No.
Plenty of politics on show then. Jamie Dimon was, of course, just one of 6 leaders of the biggest US banks to face questioning. For more, we're joined by Bloomberg's Michael Moore. Michael, thanks for joining us this morning. And we played there just a clip of Jamie Dimon. There were other CEOs who were present, who were answering questions. The star of the overdraft show, I mean, that was one of the big themes, wasn't it? In particular from the Democrat side, trying to get bank bosses to comment on whether they've been lending sufficiently during the pandemic.
Yes, that was the big topic. And I mean, the difference for this pandemic versus the last crisis was, banks have done quite well. It's not about bank stability or issues there. So it becomes more about these social and broader economic questions. And you saw that a lot during the hearing, a lot of talk of inequality, minimum wage, lending, the fees that lower income people often bear the brunt of. So, this was a less focused hearing than what we've seen over the past decade. It's often been about one issue when the bank CEOs have arrived on Capitol Hill, but this was a wide gamut.
This was a wide gamut, and it did have 2008 hanging heavily over it, it felt, when you were looking at the line of questioning, the aggressive nature of the questioning, the way that the banking sector was being cast, I suppose, particularly by some of the politicians.
Right, and we've seen that consistently. The banks have really never been able to get out of being somewhat of a political punching bag. And you saw it from both sides yesterday. Obviously Elizabeth Warren, went after them on the issues she typically does. But you also saw coming from the right questions about, banks being too politically active or not lending to certain sectors because of, what they termed as woke, capitalism. So I think the banks really, got it on both sides yesterday, and probably today as well.
Yeah, so the Democrats and Republicans returning to sort of pet topics, and one of our commentators, I know, making the point that maybe it would have been nice to spend some time talking about what their insights are on the economy at this point and how the recovery is going. But we will have more today, won't we, Michael? So what are we expecting? More of the same?
I think you will see more of the same, and it's a bigger group of lawmakers. The House tends to be a little more unpredictable, so I think you will see the same broad topics. But I think there is the question of there have been some indications that this could become an annual event. With not one topic, but kind of bringing bank CEOs in to talk about broader issues. The question is, how productive is it, or is it a lot of grandstanding?
Yeah, we'll see. We get another chance to see today. Michael, thank you very much. Thanks for joining us. Michael Moore from our finance team. 49 minutes into our trading session here in Europe. Up next is a big day for data in the United States. We'll break down what to expect and just how much the pending GDP print means to markets. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European market open. 52 minutes into our trading session, and European equity markets look like this, fairly unchanged at the overall level, but some real divergence. The DAX being held back by Bayer and its legal battles in the US. The CAC 40 getting a bit of a boost from Airbus. Let's talk to Laura Cooper, Bloomberg Markets Live macro strategist. And Laura, this is an interesting day here for European equities, isn't it? We've got individual stock stories kind of cutting through and taking us in different directions.
Yeah, and it does seem a little bit of a reprieve from what we saw yesterday. So banks are bouncing back today. We do have travel and leisure once again at the top of the leaderboard. And we do have those recovering base metal prices boosting those mining stocks. But really, this is a European equity market that is struggling for direction. That's really been the case over the past number of weeks. And I do think focus will instead turn to that slew of U.S. data later today. And we also have that U.S.-China trade call later. So some things for market watchers to dig their teeth into later, but certainly nothing really catching this morning.
Yeah, indeed. And we're waiting for a lot of data, aren't we? And I know you've been thinking on the Markets Live team about how that data is going to play out for markets. We're very focused on, we've got PCE tomorrow, of course, but even before that, plenty of other data to come through in the US. What's going to be a focus for you?
Yeah, we do have that slew of data. So we do have that second quarter U.S. GDP print. A slight upward revision is expected there. We are expected to see those initial jobless claims once again slip to a cycle low. And that's really as we are seeing those reduced incentives for workers to stay on the sidelines. Durable goods are also expected to advance. But ultimately, what we've seen is that market reaction to these data prints has been less than inspiring. And like you mentioned, I do think it's all about that core PCE print tomorrow on a month-over-month basis. It's expected to be the strongest that it's been in a number of years. And as well, I think even more focus will be turning to next week's non-farm payrolls report. We did have seasonal distortions impact that headline number last month. And with the Fed looking for a string of strong prints, that really could ramp up that narrative around tapering, which markets at this point are growing more accustomed to. But certainly these are markets waiting for that next catalyst. So I think it's likely to come more from next week than any kind of that data coming out today.
Yes, and certainly in terms of that inflation story, the PCE number due out tomorrow, if we are going to be going back to the early 90s in terms of those inflation measures, then Laura, you wonder how the Fed's narrative stands up to that and for how long it can stand up to that. We'll focus in on that inflation story. What about the geopolitics around trade? Because it's a long time since we've talked about this. It's a long time since we've seen the US and China talking about their trade issues, talking about the trade tariffs that are still in place since the Trump administration. This was something that lifted Chinese stocks a little, at least, through the session.
Yes, and I think that's been quite interesting in overnight action. And even yesterday, we did see that USD CNY break through that 6.4 mark. And really, the PBOC has expressed quite a bit of comfort around that ongoing yuan appreciation. And I would expect that that is going to continue, in part because China, I think, wants to still support that feel-good factor around U.S.-China trade. We are seeing headlines that they want to go forward in terms of that phase 1 implementation, and the PBOC is really waiting for signs of extreme conditions before they step in to curb further currency appreciation, which at this point doesn't really appear to be the case. I think the challenge is, will that actually spread through and see that Bloomberg Dollar Spot Index break through to those 2014 lows, which hasn't quite yet.
It hasn't done just yet. Laura, thanks very much. You can, of course, follow Laura Cooper and the team. MLIV Go is the function to use on your Bloomberg. IB plus TV Go are the functions if you want to communicate with us here on the European Market Open. That is it for this program. Up next, Surveillance Early Edition. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're going to have a very strong economy. We're going to have it this year. It can easily go into next year and maybe even 2023.
You and your colleagues come in today to talk about how you stepped up and took care of customers during the pandemic, and it's a bunch of baloney.
It's completely crackers that someone like me should have been in there, just the same as it's crackers that Boris Johnson was in there.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 27th of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. Department of Justice begins an investigation into the blow-up of Archegos Capital in March, adding a legal inquiry to a mound of regulatory scrutiny. A new paradigm. Joe Biden's Asia czar says the U.S. and China have entered a period of competition and that the era of engagement between the world's two economic superpowers is over. And Exxon is handed a major blow in the boardroom as Dutch courts rule that Shell's emission-cutting plan doesn't go far enough. Plus, our exclusive interview with the Chevron chief executive, Mike Wirth. So let's get straight to our top story, but we will spend a bit of time looking at sustainability. And for the first time, it does seem that investors are trying to really make a difference in corporate America. Back to Archegos, though, and the U.S. Justice Department is investigating the March implosion of Archegos Capital Management, a debacle that left big banks in Asia, the U.S. and Europe nursing more than $10 billion in losses. Our Danny Berger joins us with the very latest. Danny, you've been following this from the very beginning. What do we now know about the focus of this probe?
So at this point, Francine, there's not a ton we can discern. So sources have told us that they've contacted some of the banks involved in this. They're asking for information. They've gotten those requests for information. But at this point, it does seem that there are no accusations of law breaking being made against the banks or Archegos itself. It does really just sort of join other inquiries we've gotten from other watchdogs. You've had a lot of regulators being really critical of the incident, saying that it shows Wall Street hasn't really been conscious of risks. But yes, at this moment, Francine, it does just seem that there's more scrutiny and that they're just trying to get more information.
Danny, elsewhere on Wall Street, so banking chief executives were grilled, and I have to say it was pretty entertaining to watch by the Senate Banking Committee yesterday, and they continue today.
Yeah, exactly. So today is going to be from the House. It's bigger. There are more people there, so perhaps more unpredictable. But I really like what our colleague Brian Chapata said. He said, look, it was less grilling, more of a squabble. It was a really wide-ranging topic, less focused than a lot of these banking hearings typically are. It was everything from minimum wage to lending to climate. Republicans had a line of inquiry about what they called woke capitalism. There was a really contentious exchange between Jamie Dimon and Senator Elizabeth Warren over overdraft fees. But I thought this quote from the senator from Ohio, Sherrod Brown, really set the tone for it, saying that banks haven't held up their end of the deal, that it's past time for the financial industry to be as good to the American people as the nation has been to you. So if anything, Francine, this just really shows that after the bailout of the 2008 crisis, that banks continue to be a political piñata, rightly or wrongly. So I think today we'll be continuing to ask the question, is this hearing productive or is it a lot of political grandstanding?
Danny, Carl Icahn also getting some attention after telling Bloomberg that he's studied the crypto sector.
That's right, not just studying it, but said he might look to put in as much as $1 billion into what he's called alternative currencies. Let's go ahead, though, and hear from the man himself. Here's what he told us.
I'm just looking at the whole business and how I might get involved in it with Icahn Enterprises in a relatively big way, because I do think it's here to stay in one form or another.
Yeah, so a relatively big way. When I heard that, Francine, I couldn't help but think of your excellent interview with Nick Carter yesterday. And I know you and I were talking about this, whether you need to be an extremely online person to be able to trade Bitcoin. And Nick Carter said to you, yeah, Twitter is the best source of alpha. So now I cannot get the image out of my head of Carl Icahn and the rest of the team at Icahn Enterprises just huddled around their computers tracking Elon Musk's tweets.
Yeah, I love it. Or on their mobiles, right?
Yeah, exactly.
I mean, amazing. We'll look into that a little bit more. Danny, thank you so much. Danny Berger there with all the news you need to know about, of course, Wall Street, but also crypto. Now, America and China's era of engagement is over. Speaking at an event hosted by Stanford University last night, President Biden's Asia czar, Kurt Campbell, says that the new paradigm between the two countries is going to be competition. Now, Campbell says that Chinese military and economic policies under President Xi were largely responsible for the shift in U.S. stance. The blunt comments come as the two nations held their first trade dialogue under the Biden regime with a phone call between the U.S. Representative Catherine Tai and the Chinese Vice President Liu He. Well, joining me now to discuss further is Kathleen Hunter, who's our DC Morning editor based in London. Kathleen, thank you for joining us. So is this an escalation of words between the two sides?
Well, I think it's certainly, if nothing else, a sign that any hope of some sort of a course correction or a change in policy, a softening by the Biden administration is not on the cards at this stage. Certainly, it is an escalation, I would believe, of what we've heard, which frankly, since Biden took office, hasn't been that much, in terms of China and the possibility of a shift in course and policy. The Biden administration is in the process of reviewing, trade policy and other policies towards China that's kind of been in a holding pattern. And so this is significant because, we're hearing from essentially his, trade czar that, there isn't going to be a shift, and more significantly that basically, as you said, the era of engagement's over. They're now in an era of competition. I think we saw that era begin during the Trump administration, but certainly we know now it's not going to change.
So, Kathleen, President Biden was also urging for greater transparency from his Chinese counterpart on COVID-19. I mean, what do we know so far? It seems that he also said spy agencies in the U.S. to double down on trying to find the origin of the virus.
Yeah, and, for a long time in the U.S., at least from a political standpoint, the idea that the virus wasn't transmitted directly from animals to humans, that it might have come from a Chinese lab, that was something that was really the purview of Republicans. It was something the Trump administration officials talked about. It was something that Republicans talked about. So it's significant that now we're hearing Biden essentially not ruling that out. And, it sounds like there's still a lot of uncertainty in the intelligence community. There's, most of the U.S. intelligence agencies say actually they don't have enough information to determine exactly where the virus came from. But I think it is, both diplomatically and substantively significant that Biden is saying this needs to be looked into further.
Kathleen, thank you so much. Our DC Morning editor, Kathleen Hunter. Now, coming up, big oil is part of a climate solution, says the Chevron chief executive, Mike Wirth, even as his competitors, Exxon and Shell, are handed major blows in the boardroom and courtroom, respectively. Up next, more on the new era of U.S.-China competition and its impact on asset prices with Amundi's Monica Defend. She joins us shortly, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, U.S.-China relations are in a new phase, competition. Those were the words of the President Biden's Asia czar, Kurt Campbell, last night as a new administration opened up trade dialogue with Beijing. So let's discuss the impact of continued tensions between the world's two economic superpowers with Monica Defend, Amundi Global Head of Research. Monica, thank you so much for joining us and welcome to Bloomberg Surveillance. Monica, when you look at some of, I guess, the major shifts that we'll see, I know a lot of the focus is on inflation, on central banks. Foreign policy is always there simmering in the background. How do you fold that into, your research overall, and how much will it actually move markets?
Well, actually, the geopolitical layer is something that we are continuously monitoring and taking into consideration. And honestly, this is allowing us to temper the risk budget of the portfolios from time to time. When it goes to the U.S. and China, we were sure that all of the seeds were there to continue this new confrontational new normal. That will be played out on both sides, in the U.S. and China, as it was with Trump, but with a different narrative, if we want. We think that on one side, the U.S. will continue to perform as a global leader and wants to maintain that role. On the other side, China is not to give up in its domestic policies and controls on territories, which means for countries such as Australia, Japan, to be squeezed in the middle, and for multinational to really be under pressure, both from the U.S. side and the Chinese one.
Monica, overall, when you look at some of the fault lines, so under President Trump, a lot of the supply chains had already changed. I know there's worries about chips and access to chips. What in geopolitics could actually impact what industries? Are there specific things that you worry about, or is it more just if relations get much worse from here?
Well, there is some worries about the relation. We think that on technology, this is something that will need to be addressed, and President Biden was extremely clear on that front. So competition is on the forefront. They might start with tariffs. President Biden really doesn't like the tariff policy, so we might see some tariff cut in the pipe, but it will be really tiny. We don't think that in 2021 we will get into major changes when it refers to the trade policy. So this is a long-term subject that we will need to face.
Monica, where does Europe fit into all of this? So if you look at the U.S., but also Latin America, emerging markets, Asia, and Europe, what will power ahead more? And does this all depend on vaccines, or is it reforms that will be or may not be implemented?
Well, in the short term, the growth, so the recovery argument remains prominent. And this is why, for example, we have been recently trimming our U.S. exposure back to neutral, just because we think that economic momentum has peaked. And we're ready to add the risk on the portfolio back on some market setbacks that we expect in the future. Europe as a shiny economic momentum to be fully displayed thanks to the vaccine rollout and the next generation fund, so the investment cycle recovery. Having said that, there are some more long-term perspective when it goes to China and Asia in particular that leave us constructive. So growth really remains our prominent main theme across the portfolios.
And Monica, you believe that actually we're going to be in a recovery phase, but also expectations could be beat in terms of how quickly the economy in Europe and elsewhere can bounce back.
Yeah, indeed. And by the way, this multi-speed recovery is really allowing us to shift from one region into the other, depending on when we will think this economic momentum will gather emphasis and speed. So definitely, this is what we're looking at.
Monica, thanks so much. Monica Defender of Amundi stays with us, and we'll talk a lot more about ESG and some of the climate change initiatives as well. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The Australian city of Melbourne is entering its fourth lockdown. The hub of 5 million people and all other parts of the state of Victoria are facing 7 days of restrictions. That is as it tackles an outbreak of the variant first identified in India. Australia is far behind in vaccinations due to a combination of lack of supply and hesitance at taking the jab. Here in the UK, Prime Minister Boris Johnson is battling a major attack on his authority. That is after former advisor Dominic Cummings, the strategist who masterminded his rise to power, declared him unfit for the job. Cummings says Johnson's poor leadership led to thousands of unnecessary deaths. The testimony has the potential to damage Johnson's standing among Tory MPs, who he does rely on to keep him in power. Switzerland has refused to sign a treaty it hammered out with the European Union. The move is likely to undermine relations with the biggest trading partner and potentially damage the economy. The Swiss government says the two sides were not able to agree on state aid and wage protections, two of the key concerns there. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, investing legend Carl Icahn says renewable power is here to stay as big oil faces rebukes in both the boardroom and the courtroom. We'll talk ESG next. This is Bloomberg.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think that renewable fuels are here to stay and will increase in one form or another, simply because, you know, the voters have spoken, and I think that was part of the campaign with Biden, that, you know, you want clean air. I mean, everybody wants clean air. Nobody wants to walk and, and feel they're breathing in carbon.
Well, that was Icahn Capital Chief Executive Carl Icahn on his view on renewable power. Icahn made those comments on the same day that three of the world's biggest oil companies were dealt stinging blows over their role in climate change. Now, Shell, Chevron, and ExxonMobil may all have to go greener faster after activist investors and the courts increased pressure on the polluters. Well, we're back with Monica Defend of Amundi. Monica, thank you so much for staying on. When you look at sustainability and actually the way that it will shape businesses and it will shape the markets, is this really a new phase, like what we heard yesterday, especially from some of these activist investors, to do with polluters such as big oil? Is it going to advance much quicker, quicker than we thought?
Yes, actually, the ESG label is something that we've been hearing since a while, but I think that the pandemic, and in particular the fiscal booster that are in the pipe, actually are triggering and giving and making this ESG project faster, global, and real. And eventually this is leaving Europe with a kind of competitive advantage, because we entered the market well ahead of our other counterparties, such as the US and China, when it goes to corporate governance, for example.
Monica, are companies ready for it? So, some are doing very well. I know we're still working on a common language for a lot of them. But could this really fold some companies? Could it actually put countries on a back foot if they're not dealing with it in the correct way? Because investors, especially in America, which is surprising, maybe more than Europe, where we've done more from a long time, are now really making a big bet on it.
I hope so. I hope that becoming real in the ESG world will be a matter of distinction between one corporate and the other. And for example, we are finalizing our own ranking in the ESG environment. So definitely, this is something that will have real consequences on market level and market pricing.
Will we see, I want to talk about inflation, so I don't know whether it's a good segue, Monica, to talk about, some of these ESG things and whether that would also spur inflation. We're seeing inflation in the US, which the Fed keeps on telling us is temporary, but you worry that actually we're underestimating how, either strong inflation is or how long it is for here to stay?
No, we're not. I don't think that we are underestimating it. There is a nice connection between inflation and ESG. If you look at copper, for example, which is the asset class, the commodity that will benefit for this greening economy transition. So definitely, copper is pricing in the ESG revolution and is entering the inflation basket. I'm not worried about inflation per se. We think that is an inflation well above 4% is going to stay temporary. 3% is a more normalized inflation rate. We are comfortable with, as long as it comes with growth, with the recovery. What is worrying us at the moment is the monetary policy stance. So a policy mistake is what we fear the most.
What would a policy mistake look like at this point?
Well, the fact that central banks might be influenced by this renewed sentiment on inflation. I was quite happy to see the Federal Reserve being quite compact in taking a position on the inflation pattern. At the ECB, there are more dispersed views, which is opening the door for policy mistakes. Though President Lagarde was quite clear in stating that tapering is not in the pipe for the moment. So really, inflation goes with a change in the forward guidance on the monetary policy, and this can create some turbulence in the market. Think about what happened 2 weeks ago, as Madame Yellen was saying that maybe they were going too fast with the purchases.
Monica, thank you so much. Monica Defender, Amundi Global Head of Research. I hope this is only first of many interviews to come. Now, coming up, the star of the Overdraft show, Jamie Dimon and Elizabeth Warren share a tense exchange during a Senate grilling of Wall Street chief executives. We're live from New York next. We'll talk about banking. We'll talk about Wall Street. Of course, the other news about Archegos and the Department of Justice now looking into that as well. So we have plenty to talk about. We also look at the markets. We look, of course, at some of the data coming out of Europe. And then the story we also need to mention is, of course, what's happening here in the UK with that pretty explosive 7-hour testimony by Dominic Cummings. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now, the U.S. Department of Justice begins an investigation into the blow-up of Archegos Capital in March, adding a legal inquiry to a mound of regulatory scrutiny. A new paradigm. Joe Biden's Asia czar says the U.S. and China have entered a period of competition and that the era of engagement between the world's two economic superpowers is over. And Exxon is handing a major blow in the boardroom as Dutch courts rule that Shell's emission-cutting plan does not go far enough. Plus our exclusive interview with the Chevron chief executive, Mike Wirth. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Thursday, the 27th of May. Now, another person that testified on Capitol Hill this week was the SEC's chairman, Gary Gensler. Wall Street's main regulator is signaling that the Biden era will spell tougher oversight for two of the white-hot market's most talked about asset classes, and that's SPACs and crypto.
The bigger gap is around what's called exchanges, crypto exchanges. And I would think if we could work with Congress to try to bring investor protection to the platforms where these sometimes commodities, sometimes securities are trading on the platform.
Now, on SPACs, Gensler said that the blank check IPOs have raised a number of policy questions, such as whether investors are appropriately protected. Now, let's turn our attention to SPACs because our next guest is Makram Azar. He's a former senior banker at Barclays who last year set up his blank check company, Golden Falcon Acquisitions, which raised $345 million in its U.S. IPO. Now, Makram's SPAC primarily looks for targets in the European technology, media, and telecommunications industry, as well as the fintech sector. Thank you so much for joining us. Makram, when you look at the space right now, when will you announce your first acquisition? How difficult is it to find something right now?
It's actually the opposite problem. Good morning, Francine. Good to be with you. It's the opposite problem. There are over 300 companies in Europe that want to go public over the next couple of years. And so there are only around 25 SPACs raised in the US looking for targets in Europe and another 10 listed in Europe. And so you can see the supply demand. I mean, there's a massive sort of opportunity in Europe. It's obviously more overcrowded in the US because there are over 400 SPACs looking for acquisitions on the other side of the Atlantic. But here in Europe is actually a good place to be doing deals in the SPAC space at the moment.
Have you identified the potential targets, and how far are we from you announcing it?
Yeah, unfortunately, as you know, for regulatory reasons, I can't say much more because we're SEC regulated and they're very strict about these things. But we're making great progress. And given the opportunity set, I think it should be not too far away. At the moment, there are around 20 deals that are supposed to close over the next few weeks. I think it's better to let the market digest the backlog before announcing deals. You've seen, obviously, the market slowed down a little bit in the US, and that's a very healthy and a good thing, in my opinion. And it will provide a good backdrop for good deal making after that, and for a healthier SPAC market in the months to come.
Makram, given the number of SPACs that have been raised actually in the last couple of months, I would say probably 12 months, do you worry that there will be a rush to make deals that could end up with deals actually being bad or the wrong ones?
Yeah, that was actually the phenomenon in the first quarter of this year. As you probably know, it was a record SPAC raise on top of another record last year. And it had become a bit more, sort of bubbly in a way. It reminded me actually of the first internet bubble in 99, 2000, because you had all kinds of companies merging into SPACs, like flying taxis and what I call jam tomorrow type companies, which have not much today, but they're selling a dream. The SEC put sort of a dampening sort of a factor on all of those, and that's why the market slowed down. And that has been a very good thing, because it is making the market much more discerning and selective, and that's what we need, to make sure only quality companies that are prepared and to go public and are well set up to go public are merging into SPACs, not any company that just wants to raise capital. So in my opinion, that's a very good thing at the moment that's going on. And so I think the months to come will provide a good backdrop for a healthier market where only quality targets will be able to go into the SPAC space, and that's a good thing.
Do you think, Makram, some SPACs will actually miss their targets?
Some SPACs will miss their targets, did you say?
Yes. Do you think that that's the case?
Sorry, you mean they will not be able to close? Yeah, there will be some that will not be able to close because obviously the quality was not there, if that's your question. But I think what the market should do is focus on the quality sponsors and the quality targets, and that's what at the end of the day, actually, the SPAC market is not really an asset class. It's a conduit for good companies to go public, similarly to direct listing, etc. So what really matters and should matter most is the quality of the target that is merging through SPAC to go public. And, so when people make a general comment on the SPAC market, oh, it's not a good thing or it's a bad thing, it's actually just like a direct listing. What really matters is to find a very good quality target that is ready or well prepared to go public. And that should be the most important criteria. And obviously at an attractive valuation, because these are the two factors, quality and valuation.
Makram, overall in your industry, or the industry that you're looking at, which is TMT and also fintech, what's exciting right now? Is there anything that you think that we're not focused on yet that we will in the next couple of 12 to 18 months because it's a different way we work or the way we consume media?
Yeah, I think the market sentiment is changing a little bit, but the good news is you have over 60 unicorns in Europe, some real nuggets, that deserve to have access to the capital markets. The IPO market in Europe is very weak, unfortunately. 70% of all IPOs globally this year to date have been done in the US, only 4% in London, and that was actually the largest percentage in Europe. So again, it's a supply-demand thing that you have amazing European champions. When I say European, I include the UK. There are 21 unicorns in the UK, some that have already gone public, like Deliveroo and Darktrace, etc. But given the speed of the IPO market in Europe compared to the US, I think SPACs can provide a fantastic opportunity for those champions, European champions, to go public more speedily, because the SPAC process is much quicker, as you know, and provides more certainty, and particularly for unicorns or higher growing companies who are able, obviously, to show their projections. That is actually a much better conduit and a quicker one in the current environment.
Makram, thank you so much. Makram Azar, their Golden Falcon Acquisition Chief Executive Officer. Now, Elizabeth Warren stole the show on day one of the U.S. Bank Chief Executive's testimony on Capitol Hill. The Massachusetts senator lived up to her reputation as the Senate's biggest critic of Wall Street. In a heated exchange with Jamie Dimon, she labeled J.P. Morgan's chief executive as, quote, the star of the overdraft show, making the point that banks kept charging high fees to customers struggling during the pandemic.
Without that overdraft money, would your bank have been in financial trouble?
We waived the fees for customers upon request if they were under stress because of COVID.
I appreciate that you want to duck this question. Do you know how much your profits would have been if you'd actually waived all the fees as the regulators recommended?
We waived the fees every time.
The answer is your profits would have been $27.6 billion. I did the math for you. So here's the thing. You and your colleagues come in today to talk about how you stepped up and took care of customers during the pandemic, and it's a bunch of baloney. In fact, it's about $4 billion worth of baloney, but you can fix that right now. Mr. Dimon, will you commit right now to refund the $1.5 billion you took from consumers during the pandemic?
No.
Right now?
No.
Well, joining us from New York is our Bloomberg correspondent, Shonali Bazak. Shonali, thank you so much for talking to us about this so early in the morning. I mean, when you look at the kind of exchanges that we saw, they were pretty heated. How bad did the big Wall Street chief executives look?
It was very interesting because there were certainly some very tense moments and heated exchanges among the Democrats and the bank CEOs. But remember, there is still a fair bit of Republicans on that Senate committee that really defended the banking system, said that it held up very well during the financial crisis, and frankly asked banks to resist the pressure, to resist wokeism and appeasing Democrats here. So that was Pat Toomey, the ranking member of the committee, who had made that comment in particular. With that said, this is a Democrat-controlled White House. We have a lot of new regulators in place. And so that tone that Sherrod Brown had put in place after the hearing was that Wall Street will be put on notice. There's a clear focus on wages. There's a clear focus on what banks are doing for their employees and focusing on more communities that have been underbanked for a very long period of time.
So, Shonali, I mean, the Democrats went pretty hard. What about Republicans? Were you surprised by the warnings that we had from the Republican side?
It's interesting. I wasn't surprised, but you just saw how polarizing the views were in Washington, really asking the bank CEOs to resist pressure. Other issues that had come up were climate change, were voting laws, and the pressure for bank CEOs to engage on those issues is immense, but there's also a force that's asking them not to. I think the place of these bankers in society will be questioned in a big way. Sherrod Brown had said on the onset of the hearing that these bankers were the most important CEOs in the country, given how much they control both in terms of economic power and also in terms of the U.S.'s competitiveness compared to the rest of the world. Questions arise about China, Saudi Arabia, and Russia, even the hack and cryptocurrencies. So it was a wide-ranging conversation, but certainly tense at moments, setting a tone that really I haven't seen in years.
What are you actually expecting today? I mean, I guess a lot of the questions could also be linked to Archegos and this new probe that is a Bloomberg scoop from the Justice Department.
Absolutely. You know, that is something that did not really come up yesterday. We were expecting to hear more on that today. What do we know? We know that they're going to be meeting the House, and we know that Maxine Waters has a very strong focus on the underbanked, racial equity. We expect climate to keep coming up as well. Yesterday was a lot of very focused yes or no questions. Will you allow your members to unionize? Will you raise your minimum wages? Will you commit to not banking companies that deal with fossil fuels? So we had a lot of that yesterday, expecting more of that today, albeit on a bigger scale, given there are more members.
Shonali, thanks so much. Shonali Basak there in New York covering all of this for us. Now, coming up, Chevron, Shell, ExxonMobil all handed a series of stunning climate change rebukes as courts and institutional investors back green demands. That's coming up next, and this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, three of the world's biggest oil majors were dealt stinging blows yesterday, each focused on their responsibility for climate change. Exxon faced a rebellion by an activist investor who, with only 0.2% of the shares, gained 2 seats on the board. Now, Shell lost a Dutch court battle over the pace in its cutting emissions, which the court ruled isn't going fast enough. And finally, Chevron's shareholders backed another plan to reduce emissions in direct defiance of its board. Chevron's chief executive exclusively told Bloomberg that the oil industry is part of the climate solution.
Investors of all types are focused on this as we are, and so that's part of it's part of the environment today for companies that are providers of energy, and I believe our industry is part of the solution. We have the technical capability, the project management capability, the engineering acumen, and the financial capacity to be part of the solution.
Well, joining us now is Bloomberg's Green, Akshat Rati. Good morning, Akshat. I always go to Akshat for, wisdom and analysis, so I couldn't be more happy to actually have this conversation on air as well. First of all, this was a pretty humiliating blow for actually these three companies. If every day was like this, climate change would be fixed so much quicker. So first of all, how big of a deal was yesterday, and how much more pressure does that put on big oil?
I think at least between Shell and Exxon, any of those single events would have been a big day for big oil, but have all of that happening on the same day was quite a bit. And it's not a coincidence. Some of this was actually building for quite some time. The Shell case, for example, is just the most recent climate case to make it all the way and give a victory to people who demanded more of oil companies. But there are hundreds of these cases around the world, and the number has been growing at a very rapid pace since the Paris Agreement was signed in 2015. The Exxon vote was much more surprising because it started with an investor that owns only 0.02% of a stake in Exxon, but clearly it made a very strong case that Exxon needs to change as the world is taking climate change seriously.
How much, significant change will that spur if you can, as a shareholder, make such a difference with so little? Does it mean that corporate America is changing? That it means that, is it the time for investors to really make a difference?
Almost certainly. I think we know that there is a little bit of a herd mentality in investors. There is a conservativeness in going first, but once you see change happening, others follow. And this is true not just of shareholder votes, but also of corporate strategy. One very good example of change that we've seen just in the last 12 months is company after company, oil companies, setting net zero targets. Now, those are targets that are very hard for a fossil fuel company to meet, and yet they're falling over each other to try and set even more ambitious ones. And what started in Europe is now starting to take hold in America too.
Akshat, it didn't really actually move the share price for a lot of these oil majors. So how do you explain that?
I think that is right. What happened yesterday isn't going to affect the oil company tomorrow or next month or perhaps even this year. Both the shareholder vote at Exxon and the court case for Shell is to fundamentally change the strategy into the next decades. And so it's not a surprise that the oil price didn't change. If anything, Exxon's price was up 1% and Shell was, the change was within 1% and 2%.
Akshat, thanks so much. Akshat Rati there of Bloomberg Green, which of course is our vertical dedicated to everything climate change. You can find it on our website, but also on the Bloomberg terminal. Now, Dominic Cummings tells MPs that it's crackers that Boris Johnson is Prime Minister. Up next, we take a look at his explosive testimony before Parliament. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
In any sensible, rational government, it is completely crazy that I should have been in such a senior position, in my personal opinion. It's just, it's completely crackers that someone like me should have been in there, just the same as it's crackers that Boris Johnson was in there and that the choice at the last election was Jeremy Corbyn.
Well, that was Dominic Cummings, who's speaking to MPs this week at an inquiry on the government's handling of the coronavirus pandemic, saying that it's crazy or crackers that his former boss, Boris Johnson, is the prime minister. Well, joining us to talk about all of this is Bloomberg's UK government reporter, Emily Ashton. Emily, look, the testimony and was actually very compelling viewing. I mean, it was entertaining. There were points where people kind of stood up and said, wait, did he just say that? But does it resonate with MPs? Does it resonate with the people that elected him? Or does it make no difference to Boris Johnson's popularity?
I think that is the question being asked today. And I think you're right that we went into yesterday thinking, look, how good can this be, really? How compelling can it be? Dominic Cummings has been tweeting for days about what's been going on in government. But actually, what he said was shocking and should have a huge impact on the government. I think the issue is to what degree is Dominic Cummings respected enough, believed enough by the public and by politicians in Boris Johnson's party. You know, can he be believed? But I think you can't get away from the man was in the room when these things happened. And even if not everything he said was completely accurate, if most of what he said was true, it's hugely damning. There were lots and lots of news lines yesterday. For example, the fact that shielding in care homes was nonsense, he said, that people were sent back from hospitals to care homes to let the virus rip through. These are hugely damning claims, and we'll hear from Boris Johnson later today on it.
I guess, Emily, and you're right, you know, as I was listening to testimony, a lot of people like myself were asking, well, is this just a former disgruntled employee? But will the health secretary, Matt Hancock, who was really dragged into this, could he be the scapegoat or the fall guy for it?
Well, that's what Dominic Cummings was saying yesterday, that his claim was that the government had put up Matt Hancock as the scapegoat for the inquiry. Now, the independent inquiry won't start till spring. He says that he wanted Matt Hancock sacked almost every day, and that Boris Johnson came close to firing him last spring. But he didn't do that in the end because he would have been the scapegoat in the inquiry, which won't, that only starts next year. I don't know now if, in a strange way, if Matt Hancock is even safer, because the government won't want to sack him on the basis of what Dominic Cummings is doing. They don't want to be dictated to by Dominic Cummings. Matt Hancock's got he's answering questions in Parliament at 10:30. He's also chairing a press conference at 5 o'clock today. So I think you can expect him to come out fighting.
Yeah, and we'll, of course, be monitoring everything and bringing it to all of our viewers. Emily, thank you so much. Emily Ashton, their UK government reporter. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. We'll, of course, continue watching what's happening here in the UK. We'll also look at what's happening with Archegos. That Bloomberg scoop saying that the Department of Justice of the United States of America looking into a possible probe for what happened and the impact it's had on banks. And we have the big banking chief executives, again, testifying today. So certainly not a shortage of news. Happy Thursday. We're back in 2. This is Bloomberg.
Traffic. Okay. During the pandemic, no traffic at all. Okay. Where do you see the oil market in about 20 years or so? Non-existent.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Good morning, traders. I hope you started a good and profitable day. Get back to straight to the business. I'm going to place an order for Bitcoin, and I'm going to buy Bitcoin. The price I'm looking to buy at 38,360. Okay, if you're looking to trade Bitcoin right now, here is your chance. I'm placing an order to buy at $38,360 Bitcoin because we're trading on margin. Okay, I have to place order little bit away from the actual price because Bitcoin kind of volatile this time, and these days is difficult to quickly execute the order. So first we'll place, then we'll have to see how long it will take. It might take a while, maybe 10-15 minutes, half an hour. Anyway, you still have time. So if you would like to trade Bitcoin, here's your chance. If you want to find out more about how we trade, how we make a profit, please do so. You need to go to company.co.uk website. You need to get the strategy, and then after when you will get the strategy, you can follow our trades, copy them. You will see what we use in order to identify the right price to buy or sell. For day traders, it doesn't really matter. We're going long or short, because in either way, if you're going short, it means you're borrowing the securities from your broker. If you're going long, you're buying the securities. So in either way, it's the money involved. And you'll find out all this information from our strategy. So stay safe, get the strategy if you want to. If you don't want to, you can follow our trades and feel free to copy them. Okay, I'll speak to you later after I will have any news for you. Stay safe.
Economic data, Francine, but this push toward ESG was evident in the activism action we saw in energy companies yesterday and also on Capitol Hill, because it's really ESG issues that lawmakers were grilling the bank CEOs on, and we're going to see some more of that today. As for what the market picture looks like ahead of all of that, it was a little bit of a mixed session in Asia. Most stocks were lower, including in Japan, Hong Kong, Taiwan. Chinese equities, though, higher by about 0.3%. Of course, that's after the first trade talks between the U.S. and China of the Biden administration. And the standout story in foreign exchange this week for me has really been the Chinese yuan. it is the strongest against a basket of its peers since 2016 and the strongest against the U.S. dollar in 3 years. Right now, that exchange rate sitting at 637.36. Other thing I wanted to point out was what happened with iron ore futures in Singapore, falling into a bear market yesterday as China tries to talk down that rally. But once again today, futures up 6%. As for what the picture looks like here in the U.S., we look set for a softer open when looking at the futures market. Of course, that opening bell coming in just about 4.5 hours time. Right now, S&P 500 E-minis down about 6 points. Not a lot of action in the Treasury market. We're sitting right around 1.58% or so on the 10-year yield. Oil, though, moving to the downside. WTI crude breaking below $66 a barrel. Some concern out there about the potential that Iranian supply will come back onto the market in the not-so-distant future. And then I have to make a mention of Bitcoin. Not a lot of movement today. We're trading right around that 39,000 level or so, just below it. But I got to talk about it, Matt. I have no choice.
There will be a day when we don't have to mention Bitcoin. And I think a lot of viewers are going to be relieved when that day comes. Quick look, Kaylee, at what's going on here in Europe. We have the CAC 40 outperforming in Paris, the DAX underperforming in Frankfurt. I'm going to show you why in just a second. But the CAC 40, I just see Airbus calling for suppliers to prepare for 64 A320s a month by the second quarter of 2023. So that's what's boosting trade in France. In terms of what's going on in Germany, it's a story that's very closely tied to the U.S. Court system. Bayer is down once again. They've been rejected by a U.S. court in attempt to resolve the remaining Roundup weed killer claims. So those shares are really dragging on the German index. In terms of the euro, we do see it down, but still very close to 122 at 121.87. And it's been over that level a little bit this morning. I see Brent crude oil. I like to throw Brent crude here, 68.28 a barrel. I like to throw Brent crude in to remind everyone it is the global benchmark. So we talk about in New York, obviously, WTI, Texas midweight crude, but Brent is the global benchmark, and it is down just about 0.5% today. Francine?
Yeah, this is what else we're looking at today, Matt. At 8:30 a.m. New York time, we'll get a slew of U.S. economic data, including U.S. durable goods, initial jobless claims, and GDP. 11 a.m. today, the Treasury Secretary Janet Yellen speaks to the House Financial Services Committee on oversight. Then Kathy Wood and CZ of Binance speak at the CoinDesk consensus. I know our Danny Berger is all over that summit. And then it's day 2, of course, of the congressional testimony for the chief executives of Wall Street's biggest banks. So on that, Sonali Basak, Bloomberg Wall Street reporter, joins us with the very latest. Sonali, day one was yesterday. It was pretty explosive. How bad did these big Wall Street chief executives look?
Listen, it was certainly a very tense hearing, and they were asked a lot about what they're doing for their employees. They're asked about minimum wage, whether they would match Bank of America, raise it to those levels. None of the other banks had committed to something like that. They were even asked about unionization of their own employees and what they're doing for the communities that are underserved and frankly still struggling in this part of the COVID-19 crisis. So what are we expecting today at the House? We're expecting more of a focus on housing, especially given that there's still an eviction moratorium that's still very confusing to many people. We're also expecting another great focus on racial equity and what the banks are doing to lend to minority communities and why they've been left behind for so long. They've been asked a lot about their own policies on diversity as well. We expect that to continue. Maxine Waters has been particularly focused on that, producing a report on this last year. And, you know, Archegos, we would expect Archegos to come up today as it hasn't yesterday.
Yeah, it didn't really come up yesterday, kind of a big gaping hole considering what a dramatic episode that was back in March, Sonali. And of course, Bloomberg reporting overnight that the DOJ is now looking into that blow-up.
Certainly, the DOJ, the federal prosecutors in Manhattan, have started to ask banks for information, according to sources. And really, it's still information. We know that they are not the only ones taking a look at this, Kaylee. I would guide that the stress test this year could be very interesting when it comes to the Federal Reserve taking a look at these banks, of course, international central banks as well. This was not just U.S. banks, and how the SEC is taking a look as they have also launched a preliminary investigation earlier this year. So regulatory hustle here, a lot of questions about Bill Hwang's family office, as well as how the banks have gotten themselves into a multi-million-dollar hole.
Multi-billion dollar hole. Sonali, thanks very much for that. Sonali Basak there on what we can expect later today. Now, we have seen something of a reckoning for oil majors over climate change. Indeed, yesterday, my jaw fell to the floor when Exxon lost a shareholder proxy battle that saw a tiny activist, as Francine said, just 0.02% stake, winning 2 board seats. Meanwhile, Shell lost a landmark court case, and Chevron shareholders voted to force the company to reduce pollution by its customers. Here's Chevron CEO Mike Wirth.
Investors of all types are focused on this as we are, and so that's part of it's part of the environment today for companies that are providers of energy, and I believe our industry is part of the solution. We have the technical capability, the project management capability, the engineering acumen, and the financial capacity to be part of the solution.
Let's get more now from Bloomberg's Danny Berger. Danny, pretty amazing shareholder revolt, and especially considering the tiny size that this activist investor had, it's really something that's unprecedented.
Yeah, it is. And to some degree, Matt, actually to a large degree, the campaign was really a long shot considering how small they were. But it really just captures the zeitgeist of the moment that people care more about climate change. And that is filtering through to corporates and investors. And really, any of these 3 events on their own would have been significant. But altogether, I mean, it was really a seismic day. And to some degree shows how the game has shifted. And part of what engine number 1, that tiny investor, did that really was it was something that anyone could grasp, was really hit on the financials of Exxon, saying that, look, you are wasting capital and things are going to get even worse when we have the energy transition and you no longer get the benefit of the normal oil cycle. So that's an argument people are listening to and want to take action on, really flexing their shareholder power. And, for a long time, I've talked to BlackRock and they've said, look, we don't want to divest from these companies. We want to use our power to enact change within. So I think now, and yesterday really showed this, that is starting to happen no matter how big or how small that activist investor is.
All right, Bloomberg's Danny Berger, thank you so much. And let's turn now to the U.S.-China relationship. The White House's top official for Asia has said the era of engagement with China is over, and the U.S. is entering a period of intense competition with the world's second biggest economy. With us now is Bloomberg U.S. politics editor Kathleen Hunter. And Kathleen, of course, this comes as China and the U.S. Trade chiefs have just had their first conversation under the Biden administration. How could we potentially see policy change in the not-so-distant future?
Well, I think the big takeaway is that we know there's not going to be a huge course correction for current policy for the Biden administration. That's what all the signals that we saw yesterday on various fronts were telling us. You know, we heard after this meeting between the trade chiefs from the U.S. and China, the Chinese side called it a candid meeting. The U.S. side said that, you know, it was had a sort of generic readout calling for saying things were moving forward. There were definitely smoke signals that it wasn't. And so I think, you know, with the comments from Kurt Campbell that you just referenced that said that now the era of engagement is over, it's an era of competition between the U.S. and China, I think, you know, those all signal that we're not going to see a huge shift. We know that the Biden administration.
All right,
Sounds
Kathleen.
like we're losing her.
Kathleen, yeah, it seems like we're having some issues with your line, but thank you so much for joining us. That was Bloomberg U.S. politics editor Kathleen Hunter talking all of the developments between the U.S. and China. Now let's take a quick look at some stocks moving in pre-market trading here in the U.S. Your big mover to the upside is a biotech stock. Actually, Vir Biotechnology is rallying about 17% in early hours. This is after the FDA approved the emergency use authorization for Sotrovimab, excuse me, as I try to pronounce these biopharma treatments, but that is to treat mild and moderate COVID-19. It partnered with GlaxoSmithKline for that effort. Stock moving to the downside, though, is Snowflake. Of course, this was one of the big IPOs we've seen in recent years. It reported after the bell yesterday and forecast potentially slowing product sales growth, and that investors do not like, and the shares are down about 4% in early hours as a result. Also lower is Crocs. Interesting. After the bell yesterday, it was reported that it will join the S&P Mid-Cap 400, be replaced in the Small Cap 600, and yet the shares are getting sold down about 2.8%. Of course, Francine, I'm far more interested as to whether you or Matt Miller might own a pair of Crocs. I feel like Matt might.
I do, for sure.
I knew Matt would.
Yeah.
I have, what are those hunters called in the U.S. on the U.S. TV show with the beards? I think
Duck
they
Dynasty.
may have been canceled. Yes, exactly, Duck Dynasty. I have a pair of limited edition Duck Dynasty Crocs from about 10 years ago.
Amazing.
I have so many questions on that, Matt. I don't know whether it's something that we need to discuss on air or off air, but so I don't own any Crocs. I think my children, when they were 2, did.
Okay, fair
So
enough.
comfy.
Had to ask the question, guys.
We'll ask whether John Bilton, JP Morgan Asset Management, head of global multi-asset strategy, maybe owns a pair or likes to buy the stock. Also, after that on banks, Octavio Morenzi, Optimus founder and chief executive. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I really think that we're pumping a lot of money into this economy, and obviously you're going to get inflation from it. You already have it, so you have to be able to deal with that inflation, and you have to be able to put on the brakes, I think. Otherwise, eventually, we're going to hit a wall, but I don't know if that time is here yet.
That was billionaire investor Carl Icahn there weighing in on the inflation debate. Now, one thing that we've seen recently that I think a lot of people weren't quite paying attention to on the first day, but have definitely been looking at it on the second day, is the Fed mopping up really extreme amounts of liquidity. If you take a look at this chart, and for those of you listening on London DAB Digital Radio, we welcome you. I will walk you through it. Basically, you haven't had the Fed taking advantage of the repo, or banks taking advantage of the repo facility like this since way back in 2016, 2017. All of a sudden, on Tuesday, the repo facility had 48 participants putting almost $433 billion on reserves there in exchange for 0% interest. Then yesterday, it was $450 billion, a little more even, put there with 0% interest. So, Francine, I don't know exactly what this means, and a lot of people have brushed it off as not terribly key, but certainly the chart shows something has changed.
Yeah, absolutely. And actually, I think Brian Chapato was also looking at, it's a great chart, actually, my favorite today, Matt. And he was also saying that without the Fed support, if you look at rates on T-bills, they could actually dip below zero and cause volatility. So no better guest to talk about all of this than John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. John, if you look at what we were just, what Matt Miller was just showing, what we also heard in terms of T-bills, what kind of environment are you dealing with in terms of deciding what the best strategy in markets is?
Well, I think first and foremost, it really reinforces the fact that we're in a very high liquidity environment. We have central banks around the globe. No matter how much you might hear about fear stories of taper tantrums or tightening soon to come, the central banks themselves, if you actually look at their actions as well as their words, as well as listen to their words, you can see that we're in that very high liquidity environment. Some of the Fed speakers over recent days have really reinforced that. Quarles, Clarida, all effectively saying, yeah, we might think about talking about planning tapering at some future point, effectively getting us ready for that gradual incremental policy change. But crucially, the environment today is one of very accommodative central banks, very high levels of liquidity and very supportive policy. And we don't really see that changing. And when it does change, it will be very gradual. So the idea that we are facing a step change in policy bank reaction functions, we think is probably wide of the mark here and now.
Does the economy face any damage, John, when we see the Fed continuing this much activity? Yesterday, we were showing a chart on asset purchases, and they, average over $120 billion a month, but last month it was over $140 billion. Is that going to be, are there unintended consequences to come?
Well, look, I mean, we've already seen the debate around inflation picking up. I mean, some of the high level of goods inflation that we saw coming through into the CPI print we recently had, really confirming that we are seeing a bit of an inflationary burst. But if we take a step back, what we've effectively seen is a pickup that was being driven partly by base effect, partly by the surge in the goods part of the economy, the services part of the economy, which is what we really need to start to see pick up as we go through the reopening trade. It's a lot more stable. So we do think this is transitory. We believe the Fed see it as being transitory as well. But the crucial things that are coming out from many of their statements is that today, as things stand, the cost of allowing the economy to run too hot, i.e. more support, is still way below the cost of tightening too early. So I think that the Fed are aware of the tail risks. Well, at the moment, we're not seeing evidence of that really growing. We're seeing an economy which still has slack in the labor force, and we still are not seeing some of the prevailing key indicators suggesting that we're anywhere close to 2019 levels yet. We are having a strong rebound, but as yet, there's still some way to go, and that's why the Fed keep their foot on the gas, we feel.
John, you know, we played some of that interview with Carl Icahn, and one of the things Icahn was also talking about in that interview on Bloomberg Television yesterday was excess, signs of excess in the markets when you look at meme stocks, when you look at cryptocurrencies elsewhere. Are you worried potentially about stability risk?
I think at the moment, the bigger concern I would have would be a sharp withdrawal of liquidity, because that would potentially present a situation a bit like 2013 around the taper tantrum. The Fed clearly learned their lesson. The ECB have also been very, very careful in terms of how they communicate. So that kind of thing would worry me more than something where we get pockets of valuation picking up. Because if we look at the broad indices, the reality is at the level of interest rates we have today, yes, price-earnings relationships may be a little bit elevated and towards the upper end of their range, but things like price-to-cash flow, dividend yield, etc., are much more normal. So we don't feel that there is excess at the moment. The crucial thing we're watching is for earnings to come through. And my goodness, they really are. Because as earnings come through, of course, they'll swell the denominator of that PE relationship, and some of those issues will be naturally unwound.
John, do you wear Crocs? I mean, Kaylee kind of brought it up, and I was looking at sales. I mean, they were up 64% of the first quarter of the year.
Well, I can't speak to Crocs, being a Sussex boy. I'm afraid it's wellies that I wear. But I think that some of the responses we're seeing coming back from a range of the retail and consumer-facing industries suggest that we are seeing decent upside from the consumer. We've seen it coming through in retail sales. We've seen it coming through in terms of consumer sentiment, consumer behaviour. So I think anything which continues to build that narrative that we are seeing a recovery at the household level is good news for the wider economy.
Franny, Crocs are just short, ventilated wellies, That's a very good point.
Yeah, slingbacks, right? I mean, apparently they're making a fashion comeback. Hasn't quite reached
Justin Bieber
the
wears them.
household yet.
So that's all I'm going to say.
That's all you need to know, guys. John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. Now, coming up later today, U.S. Commerce Secretary Gina Raimondo. That's at 5 p.m. in New York, 10 p.m. in London. And this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works for Brutus.
We've beaten this to death. Watch weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get to the first word news. And UK Prime Minister Boris Johnson is facing a flood of criticism from his former chief advisor. During almost 7 hours of testimony to MPs, Dominic Cummings laid out what he called the government's disastrous handling of the pandemic. Cummings says Johnson's poor leadership led to thousands of unnecessary deaths and called him unfit for the job. HSBC is exiting its U.S. domestic retail banking business, agreeing to sell 90 branches. This, as Europe's biggest lender, looks to boost profitability and focus on wealth management. The bank expects a pre-tax cost of $100 million from the transactions, and we'll have more on banks coming up. This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
I feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
Global markets markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Matt, a lot to talk about on the markets because we're getting some economic data, but actually, if you just think about the testimonies that we heard yesterday, and it was, I enjoyed it. I mean, I didn't, watch the whole 7 hours, certainly, of Dominic Cummings, but some of the words that he used was crackers, and I find myself now always saying crackers, and then, of course, it's day two of the testimonies of Wall Street banks.
Yeah, it was really interesting. Dominic Cummings was saying it was crackers that he had been put in that position, that he was a senior advisor to government, and basically saying the whole group was just basically a giant clown show. So I thought that was a little bit interesting, weird, and definitely entertaining. On the flip side, you have Elizabeth Warren, going after Jamie Dimon. He is definitely her least favorite of the bankers on that panel. And she said the fact that they wanted to help their customers was just a bunch of baloney, going after them for the overdraft fees, which, we've all been hit with overdraft fees. But at the end of the day, whenever I get hit with an overdraft fee, I know it's my fault. I shouldn't do it,
Baloney. I love that word as well. Kaylee, I don't know whether crackers and baloney are, creeping into the markets, but certainly they'll look at economic data.
I'm not sure there's anything baloney or crackers going on in the markets today, to be perfectly honest. I would say the stock 600 is at another record high, but just barely. I mean, we're talking it's up less than a point, only by 0.07%. And in the
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bitcoin is the reserve currency of the crypto asset ecosystem. We are extremely bullish. Our confidence in it has gone up since 2017.
Look what's happening to bonds right now. What's next? And we think crypto could be the solution now.
Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target?
We go through soul-searching times like this and scrape the models, and yes, our conviction is as high.
We bought a lot of Tesla today across any strategy. Our excitement about the potential of a ride-hailing service as a bridge to an autonomous service.
The model changes completely if Tesla gets autonomous right, and we think it will.
Cathie Wood, ARK Investment Management CEO and CIO, speaking with Bloomberg on multiple occasions. Joining us now for more is Bloomberg's Annie Massa, co-writer of this week's Business Week cover story, also today's Big Take. And Annie, the story really is all about how Cathie Wood is undeterred. She's had a very rough couple of months, her flagship fund down about 30% from its peak, and yet she keeps the faith. She's all about the future, says she operates with a 5-year time horizon. How long are investors going to keep the faith in her?
It's a great question. I mean, we saw Cathie Wood absolutely surge onto the scene in 2020 in a big way. Her funds, her 8 funds at ARK, took in more than $100 billion in net flows. And this year, we've started to see performance falter, and those funds have started to see some outflows. So there's definitely a moment of turbulence happening for her, but she has this kind of very rosy vision of the future. There's always 5 years from now, always looking out ahead. And the open question is really, will investors stay on board with that vision of the future that Cathie Wood has held on to really for her entire career, this kind of tech utopianism?
What's made her, I mean, what has brought her, Annie, from, niche ETF operator, and really all ETF managers had been niche until this, to superstar? Was it social media?
Social media definitely is a huge component of it. ARK is interesting because they're so open about their investment strategies. Cathie Wood is all over Twitter, similar to Elon Musk, maybe not exactly to his level, but similar to Elon Musk, he has a gigantic online following on Twitter, on YouTube. People follow these ARK investment ideas, and Cathie is just out there giving her thoughts. And it's interesting because when you think about other kind of investment strategies, sometimes a portfolio manager will be playing their cards very close to the vest. But ARK has taken this approach, which is particularly interesting in the ETF world, where it's kind of one of these more rare, actively managed ETFs instead of index tracking. They take this approach where they're very open about all their ideas about the future and why they're making the investments they're making, which are investments that, some on Wall Street kind of have scoffed at, particularly bets around Bitcoin and Tesla.
Annie, congratulations on a really great piece of journalism that's out on the terminal, but also on the website. In it, there's a phrase that really caught my eye where you say, Cathie Wood is an unlikely evangelist for change in many ways. Why?
Well, she's an evangelist for change, but what we might think of someone who has these big beliefs in tech reshaping the future, the idea that might come to mind might be a Silicon Valley entrepreneur, for example. But this vehicle of of thinking big about how tech will reshape the future, how flying taxis are going to change our lives, and 3D printing being all packaged up into, of all things, an ETF format. It just seems like a bit of it's hard to wrap your head around why this would be the vehicle for someone who's thinking so big about change. You know, she's a woman in the investment industry who's become kind of a rock star, which is rare to see, particularly rare to see as far as ETFs go. They're not a vehicle that you would think of as having these big, like, outsized marquee names, and Cathie Wood has kind of bucked that trend in some ways.
How has her strategy had to evolve as her funds grow larger and larger and larger? Of course, we talk a lot about concentration with Cathie Wood. How is that changing?
That's right. So the ARK funds, as they've gotten bigger, have had to adapt. And this has been a concern, especially when they were taking in such huge inflows. There was a concern that they're so big, they're going to be chasing after investments and just have too much money that they have to put into those investments. And should the market turn on them, there could kind of be a death spiral as they withdraw, as funds are withdrawn. So, you know, of course, that's not top of mind in a situation where these ARK funds are starting to see their performance falter a little bit and starting to see outflows. But concentration risk has been traditionally a concern as ARK funds have grown.
Annie, thank you so much. Annie Massa there with some great reporting, of course, on Cathie Wood. The big take, it's today, just came out. You can see it on our Bloomberg terminal or on our website. Now, coming up a little bit later today, Brian Levitt, Invesco Global Market Strategist. I'm sure he'll be asked a question or two about Bitcoin. That's at 7 a.m. in New York, 12 p.m. in London, and this is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. We're also joined by Tom Keene, our favorite part of the last half hour of Bloomberg Surveillance Early Edition.
The favorite part of the last 5 minutes of the show.
HSBC, and actually, Tom, you know, they exited U.S. retail to focus on wealthier clients in Asia.
This is home. I don't think I played for Marine Midland Bank in ice hockey, but long ago and far away, Francine, there was a dream of a bank from Hong Kong and Shanghai coming into Western New York and buying the Wadsworth family's bank called Marine Midland and making a go of it in the United States. I'll be direct. It was a failure from day one. It has been a 40-year train wreck, and today HSBC finally says enough. Great credit to Noel Quinn on this. Bring up the chart.
Yeah, why a failure from day one?
Cultural, I think, and I'll be blunt, they bought the wrong asset and couldn't move fast enough to scale up. They should have paid up for a much more visible regional bank than Marine Midland. That's 2020 hindsight. Here's a chart, and it's real simple. The Keefe Bruyette Index, the KBW Index, and then HSBC from 2008, just simply not getting it done. There's no other way to put it. They've really failed. And that's a broader bank story as well. They exit here, Francine, because they can't make money with small accounts. If you don't have $75,000, you don't get to speak to HSBC anymore. And that's about scale. That's all there is to it.
I have to say, Tom, you know, there are a number of European banks. I mean, Santander comes to mind, but others that have struggled in the past with their operations in the U.S. And maybe it is cultural. Maybe it's just, you know, such a difficult market for someone who doesn't have that American DNA. And you wonder whether more will exit.
Well, exactly. But Matt Miller, help me out here. How does J.P. Morgan or Bank of America do in Germany?
They don't exist here in Germany. That's not a possibility. They're locked out.
Okay, so they're, you know, Francine, it's a huge story.
I mean, in terms of consumer banking, Tom, in terms of consumer banking, right? I mean, in terms of what HSBC was trying to do in the U.S., those U.S. banks don't do that here.
Yeah, it'll be interesting to say the least.
Yeah, Tom, I think JP Morgan is starting a consumer bank here in the UK, and they're using that as a benchmark, if it's successful here, to then roll out maybe to the rest of Europe. Tom Keene, co-anchor of Bloomberg Surveillance there. Thank you. Fun as always. Now, let's look at what else we're watching. Kaylee, I don't know whether, you know, we should look at bank testimonies, but also data.
We can look at the data. We get durable goods, which could be really interesting for supply chain issues. And of course, we're always watching initial jobless claims. Or we could talk about banks some more, because it is day 2 of those hearings on Capitol Hill. This time, they're going to get grilled by the House Financial Services Committee. That starts around noon Eastern time. We'll see if Representative Maxine Waters and her peers will have some of the same focus on the ESG issues we saw yesterday. If they'll get into other issues like Archegos, which was largely avoided yesterday, even though that is once again in the news today with that DOJ investigation, Matt.
Yeah, well, and of course, they've been looking at them, not the DOJ, as we spoke about this morning, but other regulators have been looking at them since pretty much Bloomberg broke that story. I am watching the Ferrari 812 Superfast. Our Bloomberg Intelligence Autos analyst, Michael Dean, has a great piece out today. It's among the most read on the terminal. And it's tragic, really, saying that this could be the last naturally aspirated V12 engine Ferrari makes. Really depressing news for me, probably good for the climate, because it emits about 340 grams of carbon dioxide per meter, or I don't know what the measurement is, but in any case, it's not as clean as a lot of other cars. It has much better margins, though, 38%, says Michael Dean, and still, that's not enough to help Ferrari stock keep up with its rivals. This year, they're down, compared to all of their peers, 21%.
All right, I'm watching Dominic Cummings and the fallout after that pretty explosive testimony yesterday. So today we're hearing from the Health Secretary, Matt Hancock. He's expected to really fight back against some of the accusations. This is Bloomberg.
now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
The economy is rip-roaring. And this is the quarter where we will transition from recovery to expansion.
In a scenario where you've got consumers sitting on $3 trillion in extra savings, banks can't lend the money out because people don't need to borrow it.
We're looking for a slowing rate of equity gains. There's definitely some storm clouds that we're concerned about.
I don't think that's going to be enough to force the Fed's hand into tightening any time before 2024.
People are vaccinated and they're still not ready to get up and go and do things the way they did them before.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures down 1/3% on the S&P. We're down 11 on the S&P 500. On the NASDAQ, we come in just a little bit as well. Tom Keene, I think the beauty of this program sometimes is just the honesty. This has turned into a total snooze. Even with a Federal Reserve slowly teeing up a conversation about tapering, this market's barely responding to it.
Well, we're going to stay vigilant. I mean, the snooze is there. You're right. On a volume basis, Monday maybe for me was the most boring. There's been a little bit of sport. We're going to talk renminbi here in a moment. And yes, there is news flow, including the HSBC announcement on exiting America. But you're right, John. What people are looking for is evidence. We'll get that at 8:30 today. Lisa will talk about that. But far more, we need evidence on this boom economy.
Do you want to touch on HSBC? Exiting
we can do it now.
full-service banking in America.
Yeah, to me, it's a huge deal, and it's not about Hong Kong or Shanghai or London. It's about a 40-year failed experiment in domestic retail banking. I don't mean to pick on HSBC, but it didn't work from day one when they bought Marine, Midland, and Buffalo.
As a customer, I'm happy to. Can't get the scale. Product's not good enough. Bottom line, Tom.
Scale. It is a perfect scale exercise. You can be certain. Forget about the politics of the CEOs in Washington. They have their operating officers looking at every single subdivision saying, report to me on, is this scalable? That's the #1 lesson.
Lisa, another foreign bank heading for the exit in America.
And it just talks about the dominance of the U.S. banks. I mean, in addition to the failed experiment, as you say, John, there is this idea that the U.S. banks are increasingly untouchable. Yes, the rate regime also helping them in the United States, but just simply their size, their scope, the prominence of their capital markets operations. I will say, the hearings yesterday were interesting.
Oh, here we go.
Okay, because I know you guys are going to say another snooze fest, and we should have a snooze meter. But it's interesting because there was nothing that stuck. There was absolutely no sound bites that were sort of the key hallmark points of the hearings. And that, to me, is interesting. The banks couldn't get pinned down on any one point, and that, I think, John, could be interpreted as a win.
Well, I think Senator Warren was happy with her performance, Lisa, on overdraft fees. Wasn't that the sound bite of the morning, the afternoon?
But Was that the one that generally people took away from that?
Is it going to generate change, I think, is what you're getting at.
Or even a conversation about overdraft fees. I really don't see that conversation continuing today.
Pretty confusing, Tom. If you call up JP Morgan and say, can I get that back? They'll say yes. That exchange yesterday didn't really make sense, did it?
I would say with banking and with technology, and as Lisa beautifully says, the pendulum of hearings is real simple. It's theater, as you mentioned yesterday, John.
Yep.
The pendulum of hearings will continue forward into the political season, and guess what? Business just goes on. In the bull case in this market, the reason to acquire shares this morning is knowing C-class officers in every sector will adapt to the cards they're dealt by Washington.
Is that our coverage of the hearings this morning?
That's it. The pendulum of
that
hearings.
Was it. Okay. Equities down 1/3% on the S&P 500 this Thursday morning. Good morning to you all worldwide. Shaping up as follows. In the FX market, euro-dollar, just a break of euro-dollar 122, 121.95. We're unchanged on the day.
That's the same data check you did
Thank
Tuesday.
you, Tom. Yields 157.91. I actually said to the producer yesterday, and Lisa can vouch
You
for
have
this.
producers? I don't have producers.
I said to the producer yesterday, just take everything I'm about to say, cut it, and play it tomorrow. Yields 158 on a
Maybe
US
what's
10-year.
happening today.
Yields unchanged, Lisa, in the bond market.
Yeah, and actually, it's not just yields. If you take a look at the MOVE implied volatility index for Treasury yields, it's fallen to the lowest since February. It's just been on a rapid downdraft, talking about a snooze fest. Meanwhile, we're getting a slew of data. I am looking at it today, although it has been highly noisy. 8:30 a.m., we get those U.S. initial jobless claims. It's expected to continue to fall. The expected read is 425,000, still higher than you would expect given the boom economy people are talking about. Nevertheless, this is noisy data. I do wonder how much people actually use it to trade off of. We're also going to be getting durable goods and first quarter GDP. Tom, do you have something to say?
That chart on the radio, it's the claims chart. It's the most elegant chart, Lisa, I have. It is trending optimistically.
It is trending optimistically, although you'd like to see it fall even that much further down to indicate that the labor economy was recovering sufficiently. 1 p.m., this is the auction of the week. It is $62 billion of 7-year notes. This is the auction that always tends to be a bit more exciting than the others. The others have been coming in very strong, a ton of demand by investors, even though there are these inflation expectations. Maybe, I don't know. This is a confusing market, I gotta say, with the inflation expectations actually coming down, even as people talk about this boom economy. And then at 2:20 p.m., Joe Biden, President of the United States, will be in Ohio, Cleveland, and he'll be delivering remarks on the economy. I am curious to know how open he is to the Republican proposal, the counter-proposal that we are expecting today, expected to have a headline number of $1 trillion. How much is he going to indicate he will get behind that, John?
Negotiations continue. Lisa, thank you. Another Fed official chiming in on talking about it. The Vice Chair of Supervision, Randall Quarles, saying the following: it will become important for the FOMC to begin discussing our plans to adjust the pace of asset purchases at upcoming meetings. Quarles, TK, joining Mr. Clarida, Vice Chair Clarida, over the last week as well.
Yeah, well, you know, this word taper, I really have trouble with. There's been a lot of pushback on taper, John, in the zeitgeist in the last 48 hours. The word is being reformed right now and being remodeled.
Here's the line from Eric Robertson of Standard Chartered. He goes on to say, we believe that increasing anxiety about asset purchase tapering by the Fed will weigh on the market's expected growth outlook in a second half. Eric Robertson of Standard Chartered, the global head of research, joins us right now. Eric, let's just start with this. Allow me to be a little bit provocative this morning, relatively speaking, given how boring it is elsewhere. Where's the anxiety in the bond market, Eric?
Well, look, I think what we've seen for most of the year is quite a bit of anxiety about potential inflation, potential supply, the expected explosion in U.S. data, which we have started to see. But I think what's super interesting, guys, is that, you know, even with all of this good news on the economic front, and even with, as you say, the Fed, you know, thinking about tapering, Treasury yields have remained very well contained. And I think what that tells us is that perhaps we've already passed the point of peak anxiety about inflation, and the market is starting to think about the fact that in 2022, there's going to be less liquidity coming from the Fed. There'll be fewer asset purchases, and maybe the growth impulse or the peak in growth expectations is already sort of well built into the market price. So not necessarily anxiety, but I think the market is being forced to reevaluate how Treasury yields are going to respond to the outlook over the next few months.
Eric Robertson, we get lucky to have you on with your international experience. Richard Frost and Tian Chen off our Hong Kong desk today, writing a smart note on the persistency of strong yuan, unmanaged for the most part by Beijing, is just moving stronger on the Asia optimism as well. What is the signal of a strong renminbi?
Look, Tom, I think this is a really powerful theme to think about, not just for China, but for all of Asia. One of the things that we've seen over the last 9, nearly 12 months is that the strength of RMB has provided in some ways an anchor for the other currencies in the region. And, you know, to stick with the theme of volatility that you guys have been talking about, the volatility of currencies in Asia is extremely low this year, and in fact, in many cases, lower than G10 FX volatilities. And a lot of that is because of the very sort of measured pace of RMB appreciation. Now, even if RMB does not appreciate any further from here, and I think it can, but the resilience and the strength of the currency reflecting the domestic outlook, I think, is a net positive for the whole region.
There's a question that John has implicitly raised whenever we talk about the renminbi, which is, if the renminbi strengthens, is that positive or is that negative when it comes to commodities? The idea that, yes, they have more pricing power. However, if they allow prices to actually decline on the yuan, perhaps that would actually lead to fewer purchases and lower commodity prices going forward. How will this affect the commodity complex?
Look, Lisa, this is a question that gets lots of attention, so I'm glad you brought it up. There are a couple of theories, one which says that China wants or needs a stronger currency because it helps to offset or to mitigate the increase in commodity prices. I don't know if there's an enormous amount of truth to that, but what I do think is important is that even with commodity prices being as strong as they are, China remains a significant buyer of commodities. They have a significant need for energy products, for metals products, and agricultural products. And so to some degree, a stable currency at strong levels helps to manage inflation expectations. And I think that to some degree may help sustain the demand for commodities.
Eric, we've got to leave it there. It's always great to catch up, sir. Come back soon. Eric Robson there, Standard Chartered Global Head of Research. Love this line from Kit Chicks of SocGen this morning. Actually, tipping the hat to RBC's Adam Cole, pointing out how incredibly stable dollar yen is. Apart from December 2011, December 2019, this month is heading for the smallest monthly range on dollar yen, Tom, since 1975. So we're talking about this snooze fest, maybe in the bond market for now at least, but check out dollar yen for a little bit more.
Yeah, I mean, there's some really interesting things going on here. I mean, Matt played it up as Colby Smith did at the FT as well, the overnight repo. John, the underpinning here of short-term liquidity going out to record cash on hand, snoozing at the Fed or snoozing at Treasury for the banks versus the market, low volume, snoozing as we're in this range, shows you know, at some point it breaks.
It does, yeah.
At some point it goes one way or the other.
Well, make sense of it, Lisa. Howard Ward of Gabelli Funds was on this program this time yesterday talking about what an important moment we're in right now. The rate of growth is peaking in the minds of many people. We're about to make this transition in this expansion from recovery to expansion, and maybe with some significant deceleration overlaying that. The Federal Reserve is slowly evolving its language, and yet here we are. Nothing. Yeah, well, we have a lot of people coming on, though, and saying that we're not going to really get information on inflation until later in the year. So people are waiting on data from that. And in the meantime, there still is this incredible glut of cash. I think everyone's just going on vacation. They got all those vacation days, John. You think that's what it is?
I think that's part of it. They're getting together with friends. They're getting back to real life.
Sounds lovely.
Maybe. I mean, that's what I hear from all of the people I speak to in markets. I'm just saying.
John and I don't have any friends.
This is it. This is it.
This is our social moment.
No life,
this is
no
it.
friends. No.
Thanks for being our friend, Lisa.
Yeah, thanks.
Coming up, 7 a.m. Eastern Time, Brian Levy, Invesco Global Market Strategist. That sounded so sad. 4183 on the S&P. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Trade chiefs from the US and China have held a candid first conversation. That's as the two sides try to resolve some of their key differences. The phone call is one of the few top-level meetings since the Biden administration took office. Despite agreeing a partial trade deal last year, both China and the US still have tariffs on billions of dollars in goods. In the UK, Prime Minister Boris Johnson is battling a major attack on his authority. That's after former advisor Dominic Cummings, the strategist who masterminded his rise to power, declared him unfit for the job. Cummings says Johnson's poor leadership led to thousands of unnecessary deaths. The testimony has the potential to damage Johnson's standing amongst Tory MPs, who he relies on to stay in power. And Australia's second largest city entered its fourth lockdown today as concern grows over the rapid spread of infections from a coronavirus variant. For the next week, people in Melbourne will only be able to leave home to shop for food and essential items, get medical care, work or study, or to get vaccinated. The country's health minister said the move is, quote, highly regrettable but necessary. And Malaysia's prime minister is facing renewed pressure to allow parliament to reconvene. Muhyiddin Yassin suspended democracy in January. Now public anger is growing as the COVID outbreak shows no signs of easing. Daily infections have more than doubled since January, and the pace of vaccinations has been slow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
the things that I'd like to see is I'd like to see us expand infrastructure. I know Republicans say let's keep it to the hard concrete issues, and I'm not against that. I think you can get to $1 trillion by having some simple permitting and regulatory reforms that maintain the integrity of our environmental excellence, while at the same time unleashing the private sector investment.
That was Senator Kevin Kramer of North Dakota. From New York City this morning, good morning. Alongside Tom Keene, Lisa Brownwitz, I'm Jonathan Ferro. Your equity market this Thursday morning is shaping up as follows. Down 9 on the S&P 500. We declined 0.2%. In about 2 hours and 12 minutes, you'll have a ton of data in America, including jobless claims. Going into that, yields unchanged, up about 0.5 basis point, in and around that kind of level, to 158.08. Euro dollar just holding on to 122 here, Tom. Up around about 0.1%. We advance just a little bit of a stronger euro in the mix.
Yeah, you're better at this than I am, John. You actually try to do a data check. I just say, folks, nothing's changed in 24 hours.
Thank you, Tom.
Let's move on. We mentioned renminbi moving. I do want to mention gold at 1,900 the ounce.
Is that a compliment? I don't know if that was.
I'm not sure.
No idea.
I think that we need to
talk to my ex-wife. She'll figure it out. And I really want to point out, folks, as well, the VIX is under 18. John, to see that seriously, closing yesterday afternoon at a solid under 18, really, to me, speaks.
It's a reflection, Tom, of what's been going on, isn't it?
Yeah.
More broadly.
But it's a real shift to a regime we haven't seen in months and months and months.
Agreed.
No other way to put it. Right now in Washington, thrilled that Jack Fitzpatrick could stop by with Bloomberg government this morning. Jack, I want to talk about the really core knowledge here of our political game as we saw it yesterday. Everybody fascinated by the backdrops of these fancy CEOs. How would they zoom in all that? Baloney. What's the distance? What's the miles between Wall Street and this nation's centuries-old distrust of the East Coast, and particularly New York, and Main Street that's out there? Describe that gap, that distance in your Washington.
Well, right now, it's a vague distance rather than a lot of specifics. When you talk, especially to Democrats now, about what their priorities are on banking and that kind of thing, it's difficult to pin down exactly the legislative priorities and how this would be turned into a bill. But that distance and distrust is very, very palpable. You hear Senator Elizabeth Warren talking about just sort of broad complaints about a lack of lending to everyday people, and it's really sort of political catnip to bring up salaries and bonuses for big-time CEOs. We're still at a point where there are a lot of questions about how that would get translated into a piece of legislation that could actually become law. But you can see at this stage of the process that there's a lot of political appeal to that skeptical eye on New York.
I mean, just to paint this for our international audience, if you waltz down Fifth Avenue, this is 2 streets over, John, from the McDonald's where we have lunch. But if you go down Fifth Avenue and you have the home of Donald Trump, the former president, and he has a huge representation here of distrust between Main Street and Wall Street. At the bottom, John, is a Gucci children's store. Lisa gets her boys' clothes there. Constantly. I mean, the symbolisms here are amazing. With that said, Jack, away from Senator Warren, away from Senator Schumer on the other side representing banking in New York, where's the middle ground in Washington on this gap between Wall Street and Main Street?
Well, the middle ground is tough to find, especially because, as I said, the specifics on what they're actually going to do right now are hard to say. I think if you look broadly at the political issues here, the political mood in the U.S., there is a bit of a bipartisan lean toward sticking it to anyone who's seen as the elites. Republicans are trying harder to put themselves in a position to define themselves as a party for the working class. It's easy in a bipartisan way to ask tough questions of the heads of banks. But again, if you're asking where the middle ground is, in a way that would concretely affect the banks, that would concretely work its way into a piece of legislation that becomes law. We don't seem to be at that stage just yet. There's still, a fairly partisan debate over the role of Dodd-Frank and things that have happened in the past in this area rather than how they want to change the law in the future. So right now, it's something that's got a clear political appeal, but it's very, very difficult to translate into legislation right now.
And Jack, when it comes to Main Street and legislation, there is a chance for this infrastructure spending. We're expecting the Republican response to Joe Biden's latest revision to the infrastructure plan today, 2:20 p.m. Joe Biden will be giving a speech. How much will inflation be a key issue, a key political point that's raised by both sides of the aisle here as they try to push their plans?
It is a key political issue. It's something Republicans are hammering away on Democrats, citing milk prices, all the price increases that they can find. It does not necessarily seem to have as much of an appeal to Democrats, although I would point out if there were absolutely no concerns about inflation among Democrats, it may not be as important to them to fully pay for and offset the cost of this infrastructure plan, as the president has said is an absolute requirement. So it's an issue, but right now, politically, it's more of a partisan issue that Republicans hope to campaign on against Biden than something that has entirely worked its way into the real bipartisan negotiations.
Jack, got to leave it there. Thank you, sir. Jack Fitzpatrick down in Washington of Bloomberg Government. Equity futures down 9, call it 10 points, off by about 0.2%. Tom, you've said that repeatedly. These negotiations are really the start of the campaign season going into next year.
Yeah, well, the negotiations are there, and they're not going well. That's all there is to it. I think that's a clear message, not only in this week and the last week as well. Do I care what happens in the next 10 days? I'm not sure. What I want to know, John, is where are we in late June? Where are we into the heat of the summer? Does anybody even answer for that? I don't think so.
For market participants, Tom, things are really tough. Lisa, at the start of the year, you could get a decent read on how much was going to come from Washington, D.C. I don't think you can do that right now.
Right.
You know, and I actually would disagree. I think that the next couple of weeks are really interesting because they're hoping to get a deal done in the near future before the recess to get something going so that they can get some bipartisan agreement by August, September.
Come on,
these deals are already being priced into the market. They're already being accounted for by economists. If they don't get a deal, what then?
So who are you disagreeing with?
Just the time frame. I think it's interesting. I'm trying to basically find. I actually do find this interesting.
Hey, you go in search of a bipartisan moment. I haven't observed it yet.
Evidently, McDonald's for John and Tom. That's a bipartisan moment.
This show.
Exactly.
To be honest with you, can't find one yet either. 25 minutes in, equities down 0.2 on the S&P 500.
You got to spur the
down. I don't shop for children's clothes at Gucci.
Yeah, well,
just for the record.
It's a little store there, right?
Sort this out in a commercial break, guys.
No, this is fine.
Have a little chat to each other.
This
158.
This is where we talk.
We're all friends here.
John, my people aren't even stirring the tang anymore.
Yields up around a basis point. 158.41.
It's terrible.
From New York City for our audience worldwide. It's a beautiful morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
.30 in New York. Good morning. Here's your price action. Equity futures come in about 0.2% on the S&P. On the Nasdaq, down 0.4%. On the Russell, where there's been a little bit of outperformance recently, we're down 0.2%. Ben Laidler of eToro, formerly of HSBC, talking about the equal-weighted S&P 500. Keep an eye on that. On the year so far, up more than 17%. The market cap weighted S&P 500 up a little bit more than 11. That's the equity market. Here's the bond market. 2s, 10s and 30s. Your yield, 158.41. Your yield is up about a basis point on the day. Vice Chair Clarida meet Vice Chair Randall Quarles, and they're both on the same page. It is time to start talking about it. And you know what I'm talking about. We'll leave that there, TK. Switch out the board in the FX market. Want to finish on this. RBC's Adam Cole. Nice little tip of the hat to him from Kit Dukes of SocGen this morning. Dollar yen started the month at 109, is finishing the month at 109, and outside of December 2011, December 2019, it is the smallest monthly range on dollar yen, Tom, going all the way back to 1975.
Mid-month it was strong and cratered. The yen, I say cratered. Cratered yen strength. I noticed in the Ben Laidler note, which I read very carefully, John, he really re-emphasized that big tech is not just about a bond yield story, that there's a lot more going on there than analysis of bond yields and duration.
There's a lot of cyclicality in there. If you look at Alphabet, Facebook, and the earnings are there too. Let's be clear about that. Some stellar numbers.
No question about it. 8:30 today, claims gets the headline, but the second look at GDP will be important. This is without question our conversation of the day on the state of the American economy. High Frequency Economics writes brilliant, sharp notes on global economics, interest rate dynamics, and with Rubila Faruqi writes on the American economy. She joins us this morning. Rubila, I've really been looking forward to this. You moved from a 10% boom economy down to something in the vicinity of 5% economy. When you and Carl Weinberg look at that sudden shock of deceleration from a boom economy, what are the inertial forces we're going to experience as we slow down?
Good morning. Thank you for having me. So, there are a lot of dynamics in play over here. What we're looking at right now is, peak growth rate, which we expect to be around 10% in the second quarter. But after that is where the uncertainty lies. We don't really know what a post-pandemic economy looks like. What we expect is a deceleration as these fiscal measures expire. There is a lot of uncertainty about how the labor market proceeds from here. And I think until we get to that point, until we get to, say, September, there is a lot of uncertainty surrounding what will happen in the second half. It's an interesting dynamic because we can't really say that we're going to go back to a 2% or whether we're going to keep above potential.
What will C-class officers do? How will corporations adapt and adjust to a decelerating economy we've never witnessed before?
Well, I think, there's been a lot of preparation for this. It's not like this is going to be a surprise. We don't expect to grow at a 10% growth rate. That's, it's not exactly possible without, continued support from fiscal and monetary, policy. So I don't think this is going to be a shock. It's just going to be an adjustment. And again, we are still looking at a pretty strong growth rate with a lot of uncertainty surrounding that outlook.
Rubila, let's talk about tapering, not just talking about it. Kathy Jones yesterday came on and she said that actually the bond market is responding logically to taper talk, which means yields down, price higher. This is not what people were expecting. They were expecting the Fed to allow yields to climb. Yet the indication is that if they taper some of the stimulus,